first or the second shot by the end of June, whether holidays in August are allowed or not. What I'm watching is stocks really tied to the Archegos fallout, so we watch Viacom, Bishop, and Farfetch, amongst others. Coming up, more Bloomberg Surveillance. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool.
Okay, guys, position opened, as you can see, at 118.10. Well done, all of you who managed to place an order and fill this position. You're into the trade for today, and stay with me. I'll let you know what we're going to do and when we're going to place stop on profit. For people who doesn't have yet our strategy, you can get it from our website, company.co.uk, or you can get it from our streamer. Also, you can get 15 minutes free session. You can register as well. All from our streamer, you can find the information. All you have to do is just look at through the banners and advertisement. Okay, I'll speak to you later.
No other country has the political will or the wherewithal to do what the U.S. is doing fiscally.
As soon as they reopen, spending will rotate back toward a more normal balance of goods and services.
We should see spending pick up, which should lead to top-line revenue growth.
Overall, we think there's going to be consumer price inflation as well.
To really get that acceleration upward, we need to see earnings show up.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television. Mr. Farrow off again today, an extended sabbatical for John Farrow. Lisa and I will hold court this morning. And court this morning, Lisa, for me, is in Beijing. We have Catherine Mann later and Stephen Roach in moments. This tension between America and China.
And a tension between the China of old and the China of new as they try to cut back on leverage, a sort of dueling narrative of both the U.S. versus China and also China versus China, as they try to reduce some of the leverage and make a more sustainable recovery over the long term, Tom.
We'll look at the infrastructure as well, but it is this great bull market and how it redounds across foreign exchange, fixed income, and commodities as well. We'll get to the data in a moment, but Lisa, record highs yesterday, the equity markets.
Yeah, people definitely trying to price in the optimism. Today, the tone a little bit shifted. Can't make much of one day of price action, but to me, it's chasing growth. How do you best chase growth at a time when so much growth is already priced in? This morning, chasing growth is in Europe. The idea that
okay, guys,
get
stop on profit. This is what it's all about, day trading. I'm going to play stop on profit. So all of you guys who followed my trade or who use our strategy, we're going to play stop on profit at 118.12, just above the our position, 2 pips above our positions, and whatever happened, you will not lose any money. Okay, good trade, well done, stay safe.
Was a bit of a time where there was a dip. You buy that dip. That's what a lot of people are saying. I will just throw this out there. A story out this morning that Biden's tax plan would disproportionately go after big tech companies that have more loopholes and ways of getting around some of the high tax rates. If they could implement these types of higher rates on the tech giants, what would that do to valuations? I mean, these are some of the calculations right now underpinning the uncertainty.
All sorts of uncertainty about tax increases, including in New York State. And I would mention the gentleman from West Virginia yesterday who just said simply 28% corporate tax is not going to float. Joe Manchin just saying that's not going to work. Let me do a data check right now. There, I got it out. Let's do a data check right now. Futures -7. As Lisa mentions, they pause. Dow futures 20. Let me give the levels. 4,061 on SPX. Dow level 33,387 as well. And the VIX like a rock, 18.04. On the yield space, I haven't looked at the real yield yet this morning. Let's do that for John Farrow. -0.66. Like a rock. Hasn't moved. Actually, John's on a beach and like a rock. He actually like a beached whale. No, I'm the beached whale. Actually, John hasn't moved either. Keep going. I'm digging a hole.
Keep going.
1.70% in the 10-year yield as well. Lisa, what else do we have?
Well, today, actually, at 8:30 a.m., really looking forward to this. The International Monetary Fund is going to come out with their annual economic projection. They came out with one in January. They upgraded to 5.5%. They're expecting to upgrade it yet again to the fastest pace of growth for the world economy since the 1960s. Here's the catch. It's being led by the United States. How much is their upgrade again being increased because of the United States? And what is the nature of...
That's it, guys.
When it's being
you did it. You closed your trade. If you're just newbie and it was your first trade, well done. This is how you make money by day trading. So you probably received from your broker how much you earned. It's all about how much broker pays you per pip. If you're trading on margin, you'll get per pip certain amount of money. In our case, we have £100 per pip. We made 2 pips, we earned 2 pips, so we have £200. Some people might have £30, £50, so 2 pips, it will be respectively £60 or £100. This is how it works. If you want to find out why we place trade just here, why we choose this price, all you need to do, you need to just get the strategy. And you will find out everything. Otherwise, you can keep follow our trades. It's free. We don't charge yet anything at all. So enjoy and make some profit during this coronavirus. Or you might have decided to get a second job as the day trader. All possible. Good luck and well done with your first trade.
Next Asia, years and years ago, set the tone for essays on China. He followed it up with an important book on the dysfunction that we have with China. And right now, folks, it is a new dysfunction. Stephen Roach, tell me about the new codependency of China with China and America. Is it the same as the old codependency?
Well, the thing we know about codependency, Tom, whether it's human relationships or economic relationships, is it's never constant. It reflects the tension that builds between interpersonal, in this case, bilateral partners in trade and economic commerce. And, you know, China's changed its growth model. We're uncomfortable with that. We've raised a lot of other objections about China's behavior in areas like geostrategic strategy and human rights. And so we've taken a unilateral trade action against them in the Trump administration. And what my fear is, and I wrote about this recently, is that by not changing from Trump's policy, President Biden's administration has been boxed in by really venomous politics and is afraid to break out and try a new approach. And we need a new approach, or this relationship is going to go from bad to worse.
Your essay in Project Syndicate was exceptionally important. I want to expand it from boxed in with China to take off your book of years ago, Boxed In of the Next Asia, and the idea that it's not just about China, but it's about the Pacific Rim as well. To use a phrase from President Obama, what should be the pivot in strategy of the Biden administration?
Well, the pivot was a part of the problem because it was clearly aimed back in the the Obama administration of putting a lot of pressure on China, excluding China from what then was called TPP, and that really pushed China to take a lot of, I think, destabilizing actions of its own in the South China Sea, in the Belt and Road Initiative, and that then culminated in the trade war that we're now trying to find a way out of after 4 years of disaster in the Trump administration.
Professor Roach, do you think that the infrastructure plan, as it's laid out as a way to increase some of the capacity of tech sectors and the 5G build out in the United States, is an effective way to engage in this codependency that you talk about, and perhaps get a little bit more independence for the United States?
Well, we certainly need to upgrade our infrastructure. A lot of people have been talking about that for a number of years. I have to give the creative side of the Biden administration a lot of credit for expanding infrastructure into areas that we never considered it at all under the general ilk of what is infrastructure. But the question arises, and you've debated it on the show, is as noble as the objectives are, is anybody giving much consideration to how we pay for this? I mean, with interest rates at zero right now, you can do anything you want, including not just infrastructure, but all sorts of massive social programs. But what happens if and when interest rates start to go back to normal? And that's the unanswered question right now in this debate.
Steve, all of our listeners and viewers want to know what you think about asset bubble inflation. You were definitive on this at Morgan Stanley years ago, of saying there's mandates of the Fed, and one is to monitor asset bubbles. Is the Fed monitoring an asset bubble right now?
Well, it's certainly monitoring it, but it's also doing a great job in creating it. And so you've got the combination of zero interest rates and massive liquidity injections spilling over into financial markets. And, you guys report it, on your show every day, from, SPACs to Bitcoin to now we have, I guess, a lot of froth in housing markets. Yeah. This has all the classic manifestations of a very frothy environment. And, the Fed is basically talking out of both sides of its mouth. If it's worried about asset bubbles, yet it is responsible for creating the conditions that are creating these bubbles at the same time.
Although you will, some people have said that the Fed policies and some of the fiscal spending that we've seen will lead to a very depreciated dollar, one that is highly below where it is currently, that leads to some sort of inflationary push that is really detrimental to the country. We have seen the opposite this year, as we've seen the growth that has stemmed from some of these policies. Do you think that this is short-lived and that we will continue to see a tremendous dollar weakening, or do you think that this highlights the potential success of some of these programs?
No, I've been one of the ones who've been outspoken about the downward pressures coming on the dollar, Lisa. It was a call that was out of consensus in the second half of last year, and it worked, and it's not working so far in 2021. But I think the combination of plunging domestic saving, a massive current account deficit, a Fed that would normally respond to those developments by tightening policy, but won't. That's going to continue to put further sharp downward pressure on the dollar. It's not working now, but I suspect it will work as we move through the year.
Stephen Roach, thank you so much, with Yale University. And of course, Stephen Roach, some would say, in helping with Ed Hyman to invent modern market economics at Morgan Stanley years ago. And that leads us to the death of Robert Mundell. For Sarah Eisen and myself, this is a huge deal. You go from Roach and the others, back through Rogoff and Opsfeld, back through Jacob Frankel of Chicago, to the true founding father of modern foreign exchange. Robert Mundell was the most interesting guy, hugely controversial at Columbia University. Bob Mundell was a great friend of this program, and he will be missed. Robert Mundell, at 88 years old, led a vigorous life in no more than the foundation of foreign exchange. Good morning. This is Bloomberg.
With the first word news, I'm Ritika Gupta. Tough day at Credit Suisse. The bank will take a $4.7 billion write-down tied to the implosion of Archegos Capital Management, plus 2 top executives will be replaced after a series of scandals raised questions about risk management. Investment bank head Brian Chin and Chief Risk Officer Laura Warner are leaving Credit Suisse. President Biden's economic agenda just got a boost from the Senate parliamentarian. Her ruling opens the door to passing multiple additional bills this year without any Republican support. It has to do with the process called budget reconciliation, which bypasses the 60-vote rule required to pass most legislation in the Senate. In China, Bloomberg has learned that the central bank has asked the nation's major lenders to curtail loan growth for the rest of the year. A surge in lending the first 2 months raised concern of a bubble risk. Banks were told to keep new loans in 2021 at roughly the same level as last year. In sports, Baylor stopped Gonzaga's bid to become the first undefeated men's NCAA basketball champion in 45 years. The Bears beat the Zags 86-70 for the school's first national title. Jared Butler led the way with 22 points. Gonzaga finished the season with a record of 31-1. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Let me be very clear, the job isn't done. We still have about 8.5 million people who don't have a job today that did pre-pandemic, and we have a long ways to go to make sure that we get everybody back to work and we start to see the kind of economy that we hope to see post-pandemics.
Heather Boucher, the Council of Economic Advisors for President Biden. We say good morning to all of you. We're looking at the markets, -8, Dow futures in -46, and the VIX sprightly 18.7. It is a bull market, maybe with a pause this morning. As Lisa mentioned earlier, oil 59.85, West Texas Intermediate. Jonathan Farrell, off. Lisa Bramowitz and Tom Keenan joining us now on radio and TV. The star of Bloomberg News, Martin Schenker, joins us, our editor-at-large, managing editor for All on Taxes as well. August 18th, 1988, where were you? Is Vice President Bush said, read my lips, no new taxes. We've moved a little on, haven't we?
We have. You're not hearing that from the Biden administration. And in fact, if you live in New York, it's especially not the case.
How do we do this? I mean, the fact is, we know all the mechanisms of this corporate tax law. Dublin will complain internationally. In New York, people will move to Florida, et cetera. I mean, people react to higher taxes, don't they?
They do, especially if they're doing long-term planning. And it seems like all the mood music in New York especially is that taxes are going to go up for the wealthiest individuals working here. And it's a real concern about flight of high-paid executives out of New York. It was somewhat overblown, we found in the pandemic, but taxes are another story as opposed to the virus.
What about the history of that, Marty? I mean, this is a big question because there have been previous situations in New York City, in other big cities, where they've had to raise taxes. In New York, for example, after 9/11 to pay for some of the developments. Did we see the same type of flight of wealthier individuals at that time, or is this time different because of what we're seeing with remote work and the pandemic?
I sense that this time is somewhat different. The argument from those supporting higher taxes in New York are that no one lives in New York for tax reasons. It's for the culture and the excitement of living in the city. So but this time it feels like they are determined to make wealthier individuals pay. And when you have remote work, there are lots of alternatives to living in New York.
Let's talk about, on a national level, some of the tax plans that Biden has put out there. A report coming out talking about how big tech companies and pharmaceutical firms would bear the brunt of the tax hikes. Can you talk a little bit about how realistic this is, that would get pushed through with the correct aspects that would close loopholes that these companies have enjoyed to have really low rates anyway?
Yeah, the idea there is that intangible assets like intellectual property and artificial intelligence are easily moved. And so if they want to close those loopholes, the pharmaceutical and technology industries are going to be proportionally more affected by it. The question really is how this is all going to play out in Congress. Last night, the Senate parliamentarian issued a ruling that makes it somewhat easier for the Biden administration to make some of these changes in the tax laws. It'll be very complicated, but just like the stimulus plan, it's possible the Biden administration can push this through reconciliation.
I want to move forward, Marty, to what we're going to see in 2021. We had the Census Day. We've worked through to April 1 of last year. We're now into this year, where we're really going to begin to see the redistricting battle shape up as well. It is shocking how we're going to see seats lost here and seats gained there.
Yeah, it's really something that Joe Biden himself has said. The move to restrict voting among Republican states is something he is strongly opposed to. The question is, do they get the voting rights bill passed in the Senate? Right now, it doesn't look like that's going to be possible.
Let's look at 3 seats in Texas. I saw one analysis, which the gain of 3 seats in Texas, who knows, it could be 4 as well. What is the measurement of Texas becoming Democratic? I mean, it didn't happen last time around, but is it a trend there?
There is a trend there. It's now purple. People would argue that the promise of a Democratic Texas is something that hasn't been fulfilled for decades, even though there are a lot of people moving into those areas. So, we will have to see whether or not this is something that'll happen in our lifetime. Frankly, I don't see Texas turning blue anytime soon.
Well, there's a point about redistricting here when you talk about Texas turning blue. There's also a point about the population and perhaps the voters for Trump that might be swayed more to Biden should this infrastructure plan cater to some of those more blue-collar jobs. In polls, do we see that population actually getting more in favor of Biden and some of his proposals, or less so?
I think that's sort of been an underreported phenomenon, Lisa. The popularity of the Biden program is pretty striking among Republicans as much as it is among Democrats. And his infrastructure plan enjoys tremendous popularity. And the Biden administration is hoping that public support will translate into the cover they need to get this passed.
How does that translate into whether any Republicans could get on board? Perhaps not with the proposal as laid out currently, but some sort of future proposal that adapts to some of their wishes.
Well, don't count on it. I mean, right. Mitch McConnell has an iron grip on the Senate Republicans. They've already said they're not going to have any support for the Biden administration infrastructure plan, so they're just going to move forward without it.
Mets 0-1, season over?
Yes.
Well, at least for 24 hours. They come back tonight.
They come back tonight. Marty Schenker, thank you so much. Our editor-at-large and managing editor here for all of politics. Futures at -9, Dow futures at -46. Lisa, I think we spent some nice time on it yesterday on the equity markets, but we just have to say getting used to 4,059 on the Standard & Poor's 500 is just a whole new thing after all.
And what do Wall Street strategists do with that if that was their year-end projection?
Exactly.
Do they upgrade it or does it stay there? Right. I mean, or does it stay there and then you deal with the churn under the surface that we've seen? Does it just get more churny, to use your words? And by the way, I saw what you did with the Mets there. You're just trying to make yourself feel better about the Red Sox.
Yeah, that's true. It's true. But I just also was a tangential aggravation to you on your beloved
tangential aggravation.
Tangential aggravation.
That's a great banner.
Lisa, what's so important about the equity markets is I think everybody's going to hold their breath just to get to earnings season.
Yeah, well,
to re-justify with a view forward.
Yeah, show me the money. And how much is the justification in future outlooks that are very foggy right now? I mean, how can these companies give adequate future outlooks at a time when we haven't seen the reopening in full and we haven't seen some of those savings truly spent yet, Tom?
We will see. We've got much more ahead for you on radio, on television. Coming up, this is my interview of the day, and there's no question about it. Lisa Sherman is with the Ad Council. They have something to say about those afraid of the vaccination against COVID. Lisa Sherman and Hans Vetsberg, look for that. We'll do that next. This is Bloomberg. Good morning.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more.
Grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year. Almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Savannah, thrilled you're with us. Maybe a quieter market day as well. I know oil 59.74 on West Texas Intermediate. We've got an exceptionally important conversation coming up on what we're all living worldwide and nationwide with the virus. Right now, though, Kaylee Lyons with your data. Kaylee, what do you have this morning?
Good morning, Tom. I'm taking a look at Europe, which is playing a bit of a game of catch up to those U.S. record highs we saw yesterday, and that has the stock 600 at a record, actually now erasing its pandemic losses with that follow-through buying from the U.S. session yesterday. But we aren't seeing follow-through buying when it comes to U.S. equities. Looking at the futures market, S&P E-mini futures right now down about 11 points as we see maybe just a breather taking shape here with an 18 handle on the VIX, and the Treasury market going absolutely nowhere. We are unchanged on the 10-year yield, sitting right at 1.7%. That's the stocks and bonds story. In currencies and commodities within the G10 FX space, it is the British pound that is one of the underperformers. It is weaker against the dollar by about 0.5%. The cable rate sitting at 138.31 at this point. But the question is it so much pound weakness as it is dollar strength? Because the dollar is broadly stronger in G10 today. The dollar index up by about 0.2%. That may be part of what is weighing on copper futures, which are down by about 1.5%. But oil rebounding after a 4.5% loss yesterday ahead of those talks on the Iran nuclear deal in Vienna. The market today may be saying any breakthrough isn't really all that likely. That has WTI up the better part of 2%. We're sitting at $59.70 a barrel on WTI right now, Tom.
Kaylee, thank you so much. This is not only the interview of the day, the interview of the month, but indeed I would suggest this is the conversation of the summer. It was long ago and far away where a radiologist from Mount Sinai came into my studios, threw on the ground some x-rays from Wuhan and said, Tom, this is serious. That is followed with medical people worldwide helping Bloomberg Surveillance to understand this horrific pandemic. Now it is time for education. With leadership and the first founding partner at Verizon, Hans Vestberg joins us, their chairman, their chief executive officer, and we're thrilled that the woman that's making this up, Lisa Sherman of the Acclaim Ad Council, joins us today. Hans, let me go to you first. Simply, you got on board before Apple, before Benioff at Salesforce, and said this matters. Why is Verizon that communicates, why is Verizon helping Lisa Sherman on messaging what we need to do on COVID?
This, as we all know, and as you mentioned in the beginning, this is unheard of pandemic, has hit so hard on this country and the rest of the world. And of course, one thing that is important, of course, the communication around it and raising the awareness and the science around the vaccine coming up right now. And we thought that when vaccine is coming out, we have a very big responsibility as a huge employer and as a big company to be part of that communication about the awareness and also about the science around it, especially for the most vulnerable in our society that hasn't gotten that information and that has been most hit by this pandemic. So for us, it was pretty natural to be a founding partner of it.
Lisa Sherman, my mother sold war bonds. This is a few wars ago, and that was started by the Ad Council in the 1940s. I grew up with only you can prevent forest fires, and now it's only you can prevent COVID. The Ad Council's been definitive in messaging America. How are you going to message education to get the courage to vaccinate in America?
Well, first of all, Tom, thanks for having me. We're clearly dealing with the biggest public health crisis in our lifetime, and we fundamentally knew at the Ad Council that we had to launch the largest public education effort in our history. So we've recently launched a massive coordinated communications campaign that brings in every sector in the economy. And our focus is really on trying to get people to have confidence in the COVID-19 vaccines, which, you know, the fact that we have them in such short order is nothing short of heroic. But at the same time, you know, what we're seeing is high levels of vaccine hesitancy. Just the data, probably pretty current, about 50% of people right now have either begun the process of vaccination, have at least one of the shots, or intend to get vaccinated.
Yeah.
On the other end of the spectrum, you've got about 15% of the people who say they're never going to get it. So our focus is really to talk to the 35% of Americans who frankly are taking a wait and see attitude.
Well, Lisa, can you tell us about the nature of that 35%? In other words, is there a unifying characteristic of individuals in the United States who don't want to get the vaccine?
You know, we've done a lot of work in trying to understand hesitancy, and it's pretty complicated and it's very nuanced. You know, it ranges from everything. People have a lot of questions and they just want answers to their questions. Some of it could be, you know, how did this happen so quickly? Did people trade off efficacy for speed? Others have longstanding concerns because of inequities, and especially in the Black and Hispanic communities where there have been longstanding inequities in the healthcare community. So we see higher levels of hesitancy among Black and Hispanic communities. We also have begun to see more hesitancy among conservatives. These are folks who also have a lot of questions. And really, the common thread, I would say, Lisa, is that people don't want to be told what to do. They want the information. They want to be able to ask their questions. They want to feel empowered to make decisions for themselves and for their families.
So we go from the public health side to the business side, and Hans, there's a question of mobility in cities, of traffic to retail stores. You see the nexus of all of this, both with mobile data as well as your retail stores. Are you seeing people materially increase mobility as vaccinations pick up, or has it been slower than you would have otherwise expected?
It was a time in May, April last year, and we measure this sometimes on how mobile people are, is how they move in between radio towers. And it was down in some of the most urban places 60%, meaning people moved 60% less. They were staying home. That mobility is slowly coming back, and we have seen a clear improvement the last couple of months here, whereas the optimism are coming. But as we all know, the optimism is in the end of the tunnel, so we just need to see that we get through this first. But clearly, we see more foot traffic in urban areas, more mobility in urban areas right now.
Lisa, I want to go back to the branding of all this. You did this at Viacom for years. The idea of a mind is a terrible thing to waste. The Crying Indian ad campaign, which I remember clear as a day from Earth Day years and years ago. Can you just message now, or do you need celebrities? Dolly Parton has had the biggest impact so far. Miss Parton was out there with her COVID confidence. Do you need celebrities so Hans Vestberg is happy with your program?
Well, what I will say is, and I mentioned it at the top, trust is at the core of hesitancy. And so I think what we know and believe is that not only is the messaging important, but the messenger is also critically important. Who are those trusted messengers that each of these hesitant groups really believe and trust and feel comfortable with? And so for us, the common thread, again, another common thread to Lisa's question, is that medical experts are at the forefront. They're the number one. People want to understand from their doctor, their nurses, pharmacists, have they taken it? And then there are amplifiers, those people that can sort of help.
Well, Lisa, I don't mean to interrupt. Because of time, I think your observation is so important here. Franklin Graham set up a set of tents on Central Park outside Mount Sinai at the beginning of this. What do you need from the evangelical leadership away from the medical community to get evangelicals and conservative Republicans on board? What does the Ad Council need from Franklin Graham?
Look, we've engaged broad-based faith leaders who understand that this is not an either-or decision. You can have deep faith and believe that the vaccine can help you and free you to get back to life and keep your family safe.
Yeah, Hans, there's also a question about the faith in a better future, and we are looking at a way to track toward a modern era of tech prowess. And before we let you go, we have to ask about the infrastructure bill that Biden has put together and the 5G build out in the United States. What's your impression of what's laid out in the proposal as it currently is? How much will it help get 5G rollout in a smooth and consistent way across the United States?
As I think that 5G is an important piece of it, but I think that when we understand we have leapfrogged 5 to 7 years when it comes to digitalization in this country, telehealth, remote learning, and all of that, I think it's important to understand there's three pieces to solve the infra bill. Accessibility of broadband, affordability, and usability. And all these three needs to play together in actually to closing the digital divide that we now open with this leapfrog with one of the most sustainable technologies, mobility, broadband, and cloud. So I think that's what we are talking about and talking to the administration about, that we need to think holistically in order to solve the problem. It's not only one thing, but clearly 5G is an important piece of it. We are rolling out quicker than we have ever done before and more than we've ever done before, and we've increased our capex again. So this is an important piece for us.
Hans Vetsberg, thank you so much for joining us today with Verizon and their leadership on this program. And Lisa Sherman, good luck with your program. To me, it's absolutely definitive as we go into the end of 2021. Ms. Sherman with the Ad Council President and CEO. There's much more coming up. We're going to look at the medical side as well. Amish Adalja will join us from Johns Hopkins to get an update here on where we are on cases and deaths. It'll be interesting to see what we've got there. Yeah. Lisa, I want to look at the data again here. Futures negatives, and I don't see much movement in the data. What are we waiting for, Lisa?
We're waiting for earnings, and we're waiting for some kind of action on the part of the Federal Reserve. Are we going to get some guidance from them? I do want to just go back to the conversation that we just had and talk about how it signals a shift right now in the amount of vaccines out there. We are moving from a who gets it first to how do we get people to be convinced enough that it's safe to get it. This is a sea change as we get more vaccine out there, as we cross 500,000 people in a week in New York City, as we see this global rollout and in the United States on a much faster pace.
And so much to me, Elise, is the calendar. I mean, we're in the second week of April, and that's different than the second week of March. And you wonder what the second week of June is going to look like.
Hopefully a lot better than right now. That's what everyone is hoping for, and that's what's priced into markets.
We will see, but as Ian Bremmer said this morning out on Twitter, I mean, Brazil and India, other parts of this world, a mess. The U.S. and the United Kingdom doing better than good, to say the least. Futures in -9, Dow futures in -38. Stay with us on radio and television. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. Credit Suisse is paying the price for its involvement in the collapse of Archegos Capital Management. The bank will take a $4.7 billion write-down, cut its dividend proposal, and replace two top executives. Investment bank head Brian Chin and Chief Risk Officer Laura Warner are leaving. A series of scandals raised questions about Credit Suisse's risk management. The US begins indirect talks with Iran today on re-entering the 2015 nuclear deal. There are two issues to be negotiated: the steps Iran would have to take to be in compliance with the treaty, and a US agreement to lift sanctions. European officials will serve as the go-betweens in those talks in Vienna. The UK has told Britons to hold off on planning foreign holidays this summer. That's deflating the hopes of an airline industry desperate to get back in the sky. Restaurants, pubs and shops will reopen next week. Still, Prime Minister Boris Johnson says it's not yet clear that non-essential international travel can resume safely as planned on May 17th. Most European Union members will have enough vaccines for their populations by the end of June, beating the official target. That's according to an internal memo seen by Bloomberg. The EU wants to immunize 70% of adults by the end of summer. There's hope its vaccination campaign will improve after a disastrous start. BP is poised to restart share buybacks about a year earlier than expected. The London-based energy company says it's already achieved its $35 billion net debt target. That was the threshold it set for resuming buybacks. The news reflects an accelerated pace of asset sales and improved business performance for BP. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
now entering our fourth week of increased trends in cases. As the trends in data have been indicating, cases are increasing nationally, and we are seeing this occur predominantly in younger adults. This is why you've heard me so clearly share my concern. We know that these increases are due in part to more highly transmissible variants, which we are very closely monitoring.
Dr. Walensky, the Center for Disease Control and Prevention Director, she's been putting out a very responsible and sober message over the last couple days. As we spoke with Hans Vestberg and Lisa Sherman about the messaging to get people to have confidence to be vaccinated, we now look at the present medicine of this pandemic. Dr. Adalja has been such a good friend of the show. We're thrilled he can join us again from Johns Hopkins. Amesh, I look at where we are in the pregnant global reality as Brazil is failing and maybe India is failing as well. Should America be worried about the transfer of their pandemic over to us?
I definitely think that if a pandemic is raging in one part of the globe, the other parts of the globe still have to take notice. I think we'll do well in the United States with our vaccine rollout and put the pandemic largely behind us, but it will still be going on in many other countries. And that's going to be disruptive because that's going to have restrictions on travel, restrictions on trade. And, the goal is to get this pandemic behind for the whole world. So we do have to take issue with what's going on in Brazil and India and try and make sure that they can get access to vaccines, because that's the ultimate solution. And I think it's going to be well into 2022 before the entire globe is free from COVID being a public health emergency.
That's right where I wanted to go. I think this is so important. Dr. Adalja, what is your timeline where the United Kingdom and the United States can aggressively assist third world countries, emerging market countries, with their struggles with this pandemic? Did I just hear you say it is out into next year?
It's definitely going to be something where we still have hotspots around the globe in 2022. There are the Bill and Melinda Gates Foundation. There is the COVAX program, which are trying to get vaccine into those countries that are resource constrained, but it's going to take some time. If you go back to H1N1 in 2009, that hit Africa longer than it did most of the developed world because they had poor access to vaccines. So this is going to be something we have to contend with for some time, and it's going to affect the way you can travel, the way you can conduct commerce, and you're going to see those hospitals and some of those places still worrying about surges when this is something that's largely not confined to the US, UK, Israel, or any other highly vaccinated country.
Well, this morning we're seeing European stocks rise to record highs. I don't think it's a coincidence that it comes after an internal memo is reported from the European Union saying that region would meet some sort of 55% threshold of vaccinations for its people, or at least have enough vaccine for that by the end of June, This seems a lot sooner than possible. I know you probably have no care at all about the markets, but is it realistic that we could get 55% of the population covered when it comes to vaccine supplies in Europe by the end of June?
It's in the realm of possibility. It's going to be challenging. The EU has been very slow to start with the vaccine, and they've had multiple hiccups with the AstraZeneca vaccine, which is making it much harder for them to get vaccine into people's arms. I do think that supply will get better to the EU with all of the other vaccines as well as the AstraZeneca vaccine, so they can do it if they move aggressively. But I would not be surprised if they miss that deadline. Hopefully they hit it, because the faster they get vaccinated, the faster it is for the rest, the better it is for the rest of the world and for them.
What's the deal with the AstraZeneca vaccine? Is it safe? Why has it been such a controversial vaccine?
It's hard to explain. There have been some initial concerns about studies where they were using a half dose and a full dose formulation, which they couldn't understand, and that kind of set them back in the United States. And then a few trial pauses for transverse myelitis, which is a spinal cord inflammation that occurred, which wasn't linked to the vaccine. And then you saw this bigger pause because of blood clots, and that's still being worked out. For most, my general analysis is still the same, that this is a very rare complication, if it is at all linked to this vaccine. And when you're dealing with a pandemic that is out of control, the risk-benefit ratio, even if there's this small chance of blood clots, still favors the vaccine. And we haven't seen that kind of data from the UK, where they're using AstraZeneca as one of the pillars of their pandemic response. But all of that trickles down to how does the general public think about the AstraZeneca vaccine? And then we had this mix-up at with the plant in Baltimore. All of that really just translates to people saying, well, maybe I should get a different vaccine because this one has had all these problems. It's not fair to the AstraZeneca vaccine. However, that's the reality of vaccine hesitancy. And I think that's that's playing a major role in the way the EU has handled this vaccine. And it's something hopefully they'll be able to sort out and fix. And I think we will eventually get the AstraZeneca vaccine approved in the US. But with all of these bad headlines, it's going to add up in the average person's mind.
Dr. Adalja, there's 4,000 some bodies that saw the Boston Red Sox last night do it to Tampa Bay. I don't know what the Pittsburgh Pirates were doing. I'm going to assume 4,000 people in a stands of 40,000, something like that. In Texas, there were 38,238 people to watch the Texas Rangers. Your thoughts?
It's very difficult to have a mass gathering like this with only maybe less than 20% of your population vaccinated, which is the case in Texas. And they put mitigation measures in place with masks, but you wonder, just because of how the prevalence of the disease in the community, if this is going to lead to transmission events and even super spreader events, and put contact tracers underwater because they've got so many cases to track. I think that this was, this was something that I think is not necessarily the safest way to go about this. Hopefully it turns out okay. Texas has had a good trajectory in terms of cases and hospitalizations. We don't want them to go to backslide. But again, mass gatherings are going to be something particularly difficult to have until we get more of the population vaccinated, or you only have vaccinated people at your mass gathering event. And that clearly wasn't the case there. So I am worried about what this will lead to in terms of chains of transmission. Dr. Adalja, thank you so much. Greatly appreciate it. He's been just wonderful in being with us through this pandemic with Johns Hopkins Center for Health Security and their senior scholar.
Tom, I saw what you did there to slip in the Red Sox win as a question about vaccinations. That was ace. I gotta say,
it's
well
such
done.
It's such a rare occurrence that when you find the opportunity, you go there quickly. Lisa, I want to talk about the bond market. It's it's asleep. It's the reason Pharaoh's off. Nothing's moving in bonds. But is there issuance out there? I mean, is high yield and IG just getting it done?
Yes, absolutely. And not only is it getting it done, but if you take a look at the price action, it is up, up, up. The riskier, the better. And if you take a look at that extra yield on over benchmark rates for high yield bonds that people are earning, we were talking about that yesterday. It's the lowest level since 2007. It's even lower now. It's below 3 percentage points above benchmark rates, Tom. This is a huge decline from where we were a year ago. And it really raises a question. I mean, what is the nature of risk in an era where we've got fiscal stimulus and monetary stimulus pumping at the same time and a recovery? Risk is in being too cautious. That has been the message this year. Too cautious has led you with losses. That's what's happened with the investment grade bond complex. High yield bonds have eked out gains.
I'm sorry, folks, but Lisa brings up the third rail here about too cautious, and not that I would know anything about that in the triple leverage all cash fund.
Or me as a bear.
I'm looking. I've got it up wrong here right now. Riley, stop the show. You're going to get a 1-year record. Dow Jones up 48%, 1 year trailing.
Really?
I mean, if you're too cautious, that's what you miss.
You're going to quote the Dow now that Pharaoh is out? That's what he gets.
Yeah, I need medication. Liz Ann Saunders is going to come up to give me medication for being in the triple leverage all cash fund. She's with Charles Schwab. She's very good charts out on Twitter. Stay with us on radio and television. This is Bloomberg.
particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
No other country has the political will or the wherewithal to do what the U.S. is doing fiscally.
As soon as they reopen, spending will rotate back toward a more normal balance of goods and services.
We should see spending pick up, which should lead to top-line revenue growth.
Overall, we think there's going to be consumer price inflation as well.
To really get that acceleration upward, we need to see earnings show up.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television. Thank you for being with us. Important conversations on the pandemic, important conversations on what's going on in Washington, and, of course, on this market as well. Lisa, the equity market, it's a bull market. I'm getting crushed in the triple leverage all-cash fund.
Yeah, you could have said that 3 months ago as well as 6 months ago, Tom, and I think that you might have done just that. Now we're in a zone, though, where we've gone so high. We've crossed the 4,000 threshold on the S&P. And here we're waiting for hope to become reality with earnings. And that, to me, is sort of this holding pattern that you see in both equities and bonds right now.
For Global Wall Street in moments, Liz Ann Saunders will join us from Charles Schwab. Lisa, I look across the markets, and I think we have to observe one of the anomalies this week. West Texas Intermediate under $60 a barrel. That doesn't sound like an oil boom.
It's a question of supply and demand dynamics. The fact that OPEC Plus came out and said that they would slowly ramp up production. At first, this was a good thing, because we were talking about the potential for faster growth than previously expected. That was what they were seeing. And then it became perhaps a bit of a downtrend just because of some of the ongoing pandemic concerns. Honestly, hard to get too much of a read at this point, given the lack of visibility, Tom. And I think that's the theme of the past 12 months. People miss it on the way down. They miss it on the way up.
Futures -8, Dow futures at -40. The VIX like a rock, 18.05. Bonds don't give me much of a story this morning. I'm going to call it flat, a little bit of fractional curve steepening in the foreign exchange space. Let me look at the idiosyncratic moments of Turkey. Some challenges there for Mr. Erdogan. 8.15, a slightly weaker Turkish lira. And to keep Lisa happy, I'll quote yuan 6.55 as well. Boy, is that a boring day to check. Lisa, save me.
I'm really happy, though. You quoted the yuan, so there you go. We're on good terms. We're talking about missing it on the way down, missing it on the way up. The IMF today is going to come out at 8:30 a.m. with their World Economic Outlook. They're expected to upgrade it from the 5.5% that they had in January, even further. And a lot of this comes on the dynamism of the U.S. economy. Again, the question, how sustainable is it for the entire world if the recovery is led by the U.S., given the dominance of the dollar, the strengthening of the dollar, and the amount of debt that has been sold by other countries in dollar denomination? Then at 10 a.m., we get a read on the U.S. economy, the JOLTS data. This is the job opening survey, and it's a leading indicator of the labor market, especially after that March report of nearly 1 million jobs added. How much momentum is there behind that? Is that the pace we could expect, or is it set to accelerate from here as people prepare for a true reopening? We were talking about Delta yesterday, bringing back pilots as quickly as they could so they didn't have to cancel any more flights, because demand right now is outstripping supply. And then today, the U.S. and Iran are taking part in an indirect talk on nuclear deal, the 2015 nuclear deal, possibly reviving this. This weighs on crude. This idea of, will Iran be allowed to bring their oil supply back into the market? Goldman Sachs saying it probably wouldn't be until 2022, even if they did revive this deal. That said, the supply-demand dynamic, again, key issue here. And we saw crude get a little bit of a tick lower yesterday after news of these talks came out, Tom.
Lisa, thanks so much. Okay, what we're going to do here is really frame where this equity market is. And you can do that by looking back decades. Long ago and far away on a Friday evening, Martin Zweig would sit across from Lou Rukeyser and he would quietly whisper, don't fight the Fed. She was at Zweig Avatar years ago, Liz Ann Saunders, out of Delaware, and of course has become one of our most important equity stock market voices across this nation. Liz Ann Saunders joins us this morning from Charles Schwab. Boy, I'll tell you, Liz Ann, the money that's been lost by people don't fight this Fed, they've gotten crushed, haven't they?
It really is quite extraordinary. And a lot of people don't remember, since we're not all that past the one-year anniversary of the low, is that it was actually on March 23rd of 2020 that the Fed announced many of the backstop lending facilities they were putting in place specifically for the pandemic, that kind of bridge over to help the Main Street side of the economy. And that just showed then, and I think we still are watching the power of the Fed's words, even if it predates their specific actions.
The consensus launch of earnings off of grimness a year ago is up 54% on earnings. What is the Liz Ann Saunders run rate of actual earnings growth forward?
Well, so 54 is for the second quarter, which, of course, the comp relative to the second quarter of last year is the easiest. First quarter consensus is up 24, and you've got big leadership areas in terms of contributions at the sector level, consumer discretionary, financials, materials. So clearly that's cyclical bias to where you're going to see the biggest pops. Longer term, we've seen earnings growth significantly above GDP growth, obviously, but I think the story looking ahead will be one potentially about profit margins. And I think that's key to watch and listen to in this quarter's or first quarter earnings season, which begins imminently, is what do we hear from companies? Not just about first quarter earnings, but guidance for the out earnings. Do more companies step up their pace of guidance? Because remember, you had a record number of companies withdrawing guidance altogether at the midpoint of last year, but also what many of the price increases that we're seeing in this budding inflation, what that means for profit margins as we look to the next couple of quarters.
And behind this uncertainty is a question of whether we're setting the bar too high or the bar too low. And just want to bring you this news from CNN that President Biden wants all adults vaccinated, or at least eligible to be vaccinated, by April 19th. Again, bringing forward the deadline. Originally, it was May 1st. This idea of perhaps we set our expectations too low at the outset. When it comes to earning, Liz Ann, are we setting our expectations too low or too high?
I don't think we know the answer to that yet. The latest trends in terms of revisions, and ostensibly that's as analysts get more guidance, is for first quarter, we're up to 67% positive revisions versus negative revisions. So that trend is good, but we certainly may get to a point where you shift from last year's story of analysts, when left basically to their own devices to try to gauge where numbers were going to fall, ended up erring on the side of setting the bar too low. And that's why we had a record beat rate in the second quarter, record beat rate in the third quarter. We had a strong beat rate in the fourth quarter. In the fourth quarter, we actually went back into positive territory in year-over-year growth terms. The question is the enthusiasm associated with the reopening of the economy, the strength we're likely to see in GDP numbers. Have analysts now been beholden enough that they're going to raise the bar? And there's no precedent for the kind of environment and the nature of this crisis and the impact to earnings and visibility, even at this stage, regardless of what we know about herd immunity and vaccines. So I think it's still really, really tricky to try to gauge where the bar is set relative to where companies are going to report.
Liz Ann, there's the wisdom of analysts and then there's the wisdom of markets. And right now, from what you can see in markets, are equity traders pricing in a greater proportion of beats than the equity analysts on Wall Street, the idea that they're actually foreseeing and pricing in something much more robust?
Well, those companies that are providing guidance are quite optimistic, and that's where you're seeing the upward revisions. I think analysts covering industries or companies where there's still that limited guidance, and you could think about the obvious areas whether it's in leisure, hospitality, the services side of the economy, where there still isn't that visibility or base knowledge yet of what the reopening is going to look like. That's still a prospective thing. I think on the good side of the economy, I do worry that the estimate bar may have gone up a little bit. I think the whole pent-up demand story, which has been driving optimism, I think is more valid on the services side of the economy than it is on the good side of the economy, pretty much across the spectrum of durable goods, be it housing, autos, used cars, anything home improvement related, electronics. I actually think that there is a risk of pent-down demand, not so much pent-up demand, because we're well above pre-pandemic levels in those segments of the economy. And I think there's too much extrapolating of that strength in the past year out into the future.
Listen, one final question. What are we doing with our money? What does Schwab see that we're actually allocating out in 401ks?
You know, it's been interesting, the flows lately. They've definitely taken on a little bit more of a defensive posture, at least at the sub-asset class level. So the flows into utilities are actually the strongest in the past month, which is quite extraordinary. And then prior hot areas like communication services and financials are on the lower end of the spectrum. But also at the broader asset class level, definitely seeing a pickup in interest outside the U.S. So positive flows in the past month or so into parts of the rest of the world, particularly emerging markets, and actually a bit of outflows out of the domestic equity side. And we've had an overweight on developed international equities since the beginning of this year, and we're seeing that in the flow data, at least in the past month or two.
Lizette Saunders, thank you so much. Chief Investment Strategist with Charles Schwab this morning here with futures at -8, Dow futures at -37. Lisa, what do we learn there? I mean, I just think it's fascinating, this total mystery coming up in 2 weeks.
Yeah, what the mystery is. It's not the headline number of 54%, which is what people are expecting in terms of the earnings beats.
That's we do that so they'll turn up the volume and actually listen.
Well, but it's amazing that that's the baseline, right? I mean, that's what people are expecting in terms of the earnings increase is 54%. The comps are easy. The question is, I mean, the comps being not necessarily easy, but they're going to be much higher than we were last year when everybody was shut down. The key question, are we setting the bar too high or are we setting it too low? And we've missed this again and again, and we can see that from the Citigroup Surprise Index for the economy.
What does that say?
Well, I mean, you saw the record disappointment when we headed into the nadir of the pandemic shutdowns, and then you saw a record outperformance, a record spike in terms of economic surprises to the upside as we came out. This is such a difficult time to parse out. So how do you then talk about forecasts, and how do companies even come up with them?
Well, it's one of the reasons to stay with us on radio and television through April. We don't have a clue what we're talking about. We're going to talk to some good conversations here to try to frame it out. JP Morgan, I believe it's April 14th, Apple April 28th, and a host of other companies as well. On radio, David Wilson will have all of those earnings reports for you. Futures -8, Dow futures -39. Stay with us, a global conversation on economics, finance, investment. Also, I'd note dollar, well, fractionally stronger right now. We talk to Brian Nick of Nuveen next. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. A tough day at Credit Suisse. The bank will take a $4.7 billion write-down tied to the implosion of Archegos Capital Management. Plus, 2 top executives will be replaced after a series of scandals raised questions about risk management. Investment bank head Brian Chin and Chief Risk Officer Laura Warner are leaving Credit Suisse. President Biden's economic agenda just got a boost from the Senate parliamentarian. Her ruling opens the door to passing multiple additional bills this year without any Republican support. It has to do with the process called budget reconciliation, which bypasses the 60-vote rule required to pass most legislation in the Senate. In Israel, Prime Minister Benjamin Netanyahu has been chosen to try to form the next government. By law, the Prime Minister has 28 days to build a coalition with the possibility of a 2-week extension. Last month's election was Israel's 4th in 2 years. The outcome was inconclusive. There was no clear path for either Netanyahu or his rivals to put together a government. And the UK has told Britons to hold off on planning foreign holidays this summer. That's deflating the hopes of an airline industry desperate to get back in the sky. Restaurants, pubs and shops will reopen next week. Still, Prime Minister Boris Johnson says it's not yet clear that non-essential international travel can resume safely as planned on May 17th. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Very hopeful that because of the steps that we're taking, including speeding vaccinations, dealing with the pandemic, and the economic support that we're providing, that the job market is going to become far more robust in the months ahead.
Secretary Yellen out with a program yesterday on corporate taxes. We will see where that goes. A topic of discussion on Sound on Bloomberg Radio. Kevin Cirilli with us now, star of Sound on Bloomberg Radio and our chief Washington correspondent. The Washington Post, Kevin, I think puts it very nicely. Everybody's on the same page, and it's not TPP. Republicans, liberals, and someone like Joe Manchin are just saying, no, we're not going to do this on taxes. It's a raging debate. What is the present state of tax debate in Washington?
Well, let's get wonky, because last night the Senate parliamentarian Elizabeth McDonough, she actually had a decision that was in favor, really, of the Senate Majority Leader Chuck Schumer, in the sense that they now are going to be able to pass a third budget resolution measure this calendar year. Now, what does that mean? It means that the Democrats will be able to link spending bills, provided that they still are paid for with tax increases, in a third round this year. But while this is definitely a win for Schumer and the Democrats, I would caution folks to note that this is not the same as a filibuster reform, and nor does it make it easier for Democrats to attract support from their own party to keep them all together to raise taxes to pay for infrastructure.
Kevin, to someone of your ilk and, like, you know, your age, August of 1988, Bush Sr., read my lips, no new taxes. And he went down in flames on that historic moment. What does read my lips, no new taxes mean in Kevin Cirilli's Washington?
For President Biden, it means no new taxes for Americans who earn less than $400,000 annually. Yesterday, I spoke with Jared Bernstein, member of the White House Council of Economic Advisors, also, of course, a longtime senior advisor to President Biden. And I asked him about that. What do you tell the swing voter who's apprehensive about what they're hearing about taxes going up over the next couple of months? And you know, he reiterated that taxes, according to him, will not be going up for anyone who earns fewer than $400,000 annually. I think where it gets tricky is with the state and local tax deduction. I think where it gets more complicated and nuanced is for New York Republicans, for Republicans who are in California, for example, and how far a dollar can go in their respective towns and communities. And so I'm not sure that this $400,000 threshold is a sure bet for all Democrats, and it certainly is a non-starter for Republicans.
Yeah, but everybody wants more, and they all want to pay less for it, right? I mean, this is the story that's as old as time, and this is what everyone has been saying, and politicians typically come out and they say this. But we were just talking with Marty Schenker, and he was saying that if you look at popular support, even among Republicans, for this infrastructure plan, it's much higher than you'd probably expect. I mean, at what point does that push some of the representatives to be more willing to perhaps raise taxes or close loopholes or do something to be able to make this financially feasible?
Well, I'm never going to go against Marty Schenker. I got a lot of loyalty to Marty. But listen, I want to be clear here. The Republicans, they want to have this debate over taxes. They feel that if they're talking about taxes and immigration, candidly, Lisa, it helps them in the midterms. But to Marty's point, and where I totally agree, is that we're still talking about, Republicans are still talking about spending and investing in America more than $1 trillion, which is still a hefty chunk of change. But they're just not talking about spending $2.25 trillion. So, I mean, to that point, we're still talking about a lot of money and a large lump sum of it to be doled out by the Americans in the short term.
In talking taxes, yesterday, Treasury Secretary Janet Yellen came out and she urged the world to have a baseline for corporate taxes so that there wasn't sort of race to the bottom. Now, it seems unlikely that will actually come to fruition with Ireland saying, you're right, let's hike taxes on all these corporations. On the other hand, it does give some sort of indication, perhaps, of the worry and the planning of Washington, D.C. What's the bigger message from your perspective?
Her predecessor, now former Secretary Mnuchin, walked away from the OECD talks. I mean, so in just a matter of months, you've got Mnuchin walking away, and now you have Treasury Secretary Janet Yellen restarting the talks. It's part of a much broader trend, right, of the Biden administration reemerging into multilateralism and rejoining, for example, the global conversation and geopolitics, in this case, on economics. But for Secretary Yellen and from the American perspective, taxes are a non-starter for Republicans. So it again becomes this notion of she's lowering the corporate tax. She wants to raise the corporate tax rate when the previous administration lowered it. Is that just going to continue fluctuating every time parties change hands here in D.C.? I don't know, but that's the rumblings in the conversation in D.C.
Kevin, in Washington, if I see an $8 billion shift by one report from New York to Florida, if I see 1,000 bodies a day going into Palm Beach, some people calling Palm Beach the sixth borough, et cetera, you know the drill. How does that play in Washington? I know how it plays in Manhattan. I think I know how it plays in Florida. But how does the great shift here play in the nation's capital?
You know, I'll be candid. The chatter around the Beltway is some criticism of the DMV rollout of the vaccine. But I think that's kind of par for the course in major cities and around the country. But look, I mean, Florida, DeSantis, you've got Rubio. I mean, they're a major player in shaping the future of the Republican Party for this cycle. They're going to play a dominant force, especially the governor in 2022. There's chatter about kingmaking for 2022, of course, which would set up a lane for 2024. But Florida Republicans, they're you know, it's a really interesting place for the hotbed of conservatism right now.
Is one of the surprises they pick up extra seats? They pick up more seats in the census than we think?
You know, I think they could pick up more seats in the census. I think Pennsylvania could actually lose some, and I think, you know, that's a really astute point, Tom, because especially in terms of you make many, but no, I think that's a really astute point, because so many people are living in Florida, but do they actually live there? It used to be just for folks to go after they retired. Now, I'm telling you, a lot of young people, they like Miami, Tom. They like Miami.
Our travel guide, Kevin Cerulli, joining us this morning, also Chief Washington correspondent. We'll make note of that, not that we've ever sat at the bar at the Standard and Miami Beach and
never
sat there and looked at the pool at the Standard.
How's it going,
Miami.
Tom? You doing
Not
all right?
ever, Lisa.
Yeah, what you drinking this morning?
Do you know, I went to Miami once, and I think it was 42 degrees. I think there was ice on the beach. That's my luck.
So you got to stay at the counter at the Standard. It could have been worse, right?
We say good morning to those sitting on the porch at the Betsy as well in Miami Beach. Kevin Cerulli there with some of the dynamics. I'll tell you, Lisa, these dynamics, these national dynamics are really something. And as we go into this year, it's going to be a continuing story, the census.
Yeah, but underpinning this also is this idea of work from home and that people can work anywhere
I
so
agree,
they can choose
yes,
it.
yes.
And the story increasingly is that executives want their employees back, and they're increasingly bringing them back. There's a story today on the Bloomberg talking about J.P. Morgan and Goldman Sachs bringing people back to their London offices. I mean, there's something about FaceTime. Look, I mean, we're almost having FaceTime.
What's on the edge of FaceTime? We don't have FaceTime with Pharaoh, but that's a different story.
We're the edge of FaceTime, different rooms, but you know.
Future, let's do a data check to save our FaceTime. Future's at -8. Stay with us. This is Bloomberg. Good morning.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Radio and television, Bloomberg Surveillance, Lisa Abramowitz and Tom Keene. Jonathan Farrell, off today. Thank you for being with us. Interesting into the Tuesday week as well, after the bang-up Friday, bang-up Monday as well in the equity markets. We'll get a summation from Mr. Bostic in a moment. Away from the equity market, I've got to look at bonds with a churn going on right now. Lockstep at 1.70%. Really not much going. Curve was steeper. Now it's a little bit flatter. We go back and forth. And the 10-year, the real yield does next to nothing. Rumor has it Mr. Farrell could return to do the real yield program seen worldwide Friday afternoons and through the weekend. Dollar fractionally stronger but weaker off where it was 2 or 3 days ago. Sterling on 138.31 yen, 110.47. And the euro, my eyes are failing me, 118.08 on the euro as well. On individual security selection, Romain Bostic.
All right, Tom. Well, it's going to be a little bit of a sleepy day here in the markets. Keep in mind, volume has kind of been on a stair-step pattern down since mid-March. Yesterday's volume across the tape was about 30% below what we saw in March, about 40% below what we've seen year to date. A lot of people are then looking at those record highs we got yesterday on the S&P and Dow and saying, well, what's going to be the next catalyst here? So you have a few events to keep an eye on here today. First of all, GM is actually having an event today at noon Detroit time where it's supposed to provide a little bit more clarity on its EV strategy. Remember, it's going to be at a plant where it's already made announcements that it's going to make an EV Hummer and a new Cruise. The Detroit News is reporting that they're going to expand that initiative, and it's going to include a new EV pickup truck based on the Silverado, as well as a new SUV, EV SUV based on the Cadillac Escalade. There's also going to be some other discussions about R&D spending. That could be a big catalyst here because we've seen all of these EV stocks or anything related to EV getting a nice boost. GM and Ford, despite being the traditional automakers in this space, have actually been beneficiaries as well. Applied Materials going to have their investor day today as well. I'll look for some commentary on R&D spending. And how about Illumina? Of course, this is the company that makes all of this testing equipment for DNA sequencing, kind of a boring pocket of the market. But you go into any pharmaceutical company, any hospital company, any lab, and you see these machines out there on their desk. That company came out with preliminary results for Q1, 28% growth here in the quarter. They're now guiding at about 25 to 28% full year, which is about 10 percentage points from what the street was looking at. Flip with the board here. We have to talk about what's going on with Credit Suisse and Archegos. The interesting thing here in this story is not just that Credit Suisse finally put a firm number on what they expect the write-down to be, about 4.4 billion francs. But Viacom, Farfetch, and VIP Shop, there was a huge series of block trades that hit the tape late yesterday here, about $2 billion worth. And what I thought was interesting about this, we're a week and a half removed from that first sort of slate of block trades. The fact that Credit Suisse is still trying to unload some of these holdings really shows you just how deep this ran.
Romain, this is really important. I wasn't aware of that. Do we know that it was Credit Suisse, or can this be a mop-up from others as well?
Bloomberg is reporting that it is Credit Suisse, that those that $2 billion in trades. So yes.
Okay.
Yeah, and so the fact that they were still holding the bag on this this late in this whole development, I think really says a lot about how much they got stuck with this. Now a lot of people are now want a little bit more clarity from Nomura, because there's still some concerns here that there could be some extra shares still sitting out there as well.
Early and Bostic, thank you so much. And again, Credit Suisse with a little bit of a lift this morning off of the Swiss Stock Exchange as well. We had Liz and Saunders on. We looked at the equity markets, and one thing when you say don't fight the Fed is the view of the bond market. Lisa Abramowitz, what's so important here is not only the separation of full faith and credit, but what full faith and credit says about the global economy.
Yeah, well, what the full faith and credit is saying about the global economy, perhaps, is a dissonant message, because does it make sense to see the fastest growth in the world since the 1960s and a sub 2% 10-year Treasury yield? That's the question a lot of people are asking, and others are saying, well, just look at the pace of the increase. That may not be the right question to ask. Parag Garvey joining us now, ING Head of Global Debt and Rate Strategy. Parag, people have been talking about this, the pace of the rise in yields. You don't think that's what we should be looking at. Why not?
Oh, I think it's relevant, Lisa, absolutely. And thanks for having me on. I mean, we've gone from 50 to 1% to 1.7% practically in a heartbeat. It's been quite some move. But then you got to sit back and take a look at that 1.7% and compare it to the reality that nominal GDP in the US is going to grow by 10%. It just looks incredibly tame compared to that phenomenal rise in nominal GDP. And I know the argument goes that, okay, that's fine for this year, but what about next year and the year after? But still, it's remarkable. I mean, another very simple measure is inflation. Inflation is going to be 3 or 4% this year. I'm astonished that the 10-year part of the curve sits there comfortably with a sub 2% handle on yields. It's good, by the way, because it's a containing factor. It means we don't have to panic here. But for me, it's only a matter of time before we do test higher to 2% and beyond.
Well, 2% and beyond is what a lot of people are projecting. As you talk about how it's good because it allows the economy to keep going, tell us about the path from 2% to, say, 3%.
The path. What we want to see is for the path to be slow, measured, assured. It's got to be in sync with the economy, and I think we're seeing that. So the path is 2% over the course of the next number of months, 2.5% around the turn of the year. And once we get there, we can have a conversation about whether we head towards 3% as a theme in 2022. And a lot of things have got to go right during that period. Risk assets have got to hang in there. Credit spreads have got to stay tight. The economy's got to keep motoring. The labor market's got to keep improving. The global backdrop has got to be supportive as well. So if all of that follows that path as laid out, we're looking at that type of path.
Parag, I've got to rip up the script, and I don't want you to get in trouble with ING's chief counsel. But I really have to ask you, with your experience of Dublin, of the foundation and salvation of the Irish Republic over tax policy. This goes back to 1999 and the Finance Act, where Ireland said, we are going to be where corporations want to be. And you see that, for example, with Apple, with their huge contribution to Irish GDP. From where you sit, and I'm thinking almost culturally, does Secretary Yellen have any chance whatsoever to codify a minimum corporate tax?
It's the right call. There's no doubt about that, and it was very clear in the Build Back Better program documentation that was a very important part of the overall package. But it's going to be tough. You got to remember that the likes of Ireland are relatively small players. They managed to hang on to their low corporate tax rate during the height of the Eurozone crisis. They refused to budge. It would require something pan-European imposed on Ireland to bring that about. So it'll be a tough ask to bring that about. small players.
Boy, he does not want to answer these questions, Lisa. You can see that right now. I'm going to ask one more just to be rude. It's Rude Tuesday. Patrick, what is so important here for our radio and TV listeners is what you just said. Do I understand that you would suggest the Irish political system is already experienced at taking on those that want higher corporate taxes?
They've certainly been through it. At a European level, they have fought their corner. You got to remember that at the height of the crisis in Europe, Ireland was one of those economies that was fighting to survive, and they were being offered help by Europe, but absolutely refused to budge on the corporate taxation policy. And for good reason from their perspective, because it's the cornerstone of their success story. It's not all about that, but it's a very important part of how they got to where they are. I would expect them to fight tooth and nail to keep that status quo from their perspective in play.
We're talking about taxes, and it does relate to this conversation about rates, because we're getting to a time when we have to start thinking about how to pay for some of the programs that we have put out there, how to pay for some of the monetary stimulus that we've put into the economy. Or do we? I mean, basically, the consensus is that we've moved into a tightening cycle. But is that correct, or is this sort of an infeasible reality given how much debt we've incurred and given the lack of political will to truly tighten?
Well, one of the very pleasing aspects that I see out there at the moment is that this is the marketplace that really wants to take down paper. And it doesn't matter which part of the credit spectrum we're talking about here, whether it's the AAA rated US treasuries or the high yields. There's a huge demand for fixed income, which is remarkable against a backdrop where fixed income is absolutely getting hammered this year. It's been a big negative total returns year, and that continues. So my point here is that there's good demand. For as long as that demand is there, it all goes well for paying for this crisis. But one of the really important things going forward when you look at debt dynamics is that you can't have rates do what the CBO expects rates to do in the medium term, i.e. go to 3 to 5%. Because if they go up there, debt dynamics are out of control. It's really important that rates stay low. So if we can have, good demand for fixed income into the medium term, we stand a decent chance of getting through this.
Patrick, this has been wonderful, and thank you again for those delicate questions and your good answers on Dublin and taxation of corporations. Patrick Garvey at ING, head of global and debt rates and strategy there as well. Lisa, he was really struggling there in the sense that, this is a loaded issue around the world on corporate taxes.
Which is the reason why you asked, and then you watched him score.
He's on, and it's part of the Irish culture. They decided in 1999 that one of the solutions was to be a tax haven. There's no difference between what they're doing in Cayman Islands, frankly.
And it's this other side of the same story, which is how to pay for all of this debt, right? I mean, we're talking about the rate and how high rates of borrowing costs can go in order to make this all sustainable. And he's saying if we remain below 3% over the medium term, we're okay. Yeah. What if we go above that? What happens if the bond vigilantes come back? Well, can they come back at this point?
Is there any evidence we're going to go above 3% other than extrapolations and, planning on what the Fed is going to do? I would say Fed expectations have really shifted in the last number of weeks, making that April 28th meeting ever more important. Coming up in our next hour, he's in one of the most difficult districts in the nation. Do you root for the White Sox and the Cubs, or do you root for the Cardinals? That's the choice of the 13th Congressional District of Illinois. Rodney Davis will join us, Republican from Illinois. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden reportedly now wants to move up his deadline for all American adults to be eligible for the coronavirus vaccine to April 19th. That's according to CNN. Previously, the president had said May the 1st was his target date. He'll discuss vaccines later today in Washington. Iran and world powers have begun their most serious attempt yet to revive that troubled nuclear deal. And for the first time since Donald Trump sent the agreement into freefall, American and Iranian negotiators are in the same room. They're not expected to speak to each other directly in Vienna, though. Iran is insisting the U.S. lift sanctions. The White House has ruled out any unilateral gestures. Credit Suisse is paying the price for its involvement in the collapse of Archegos Capital Management. The bank will take a $4.7 billion write-down, cut its dividend proposal, and replace two top executives. Investment bank head Brian Chin and Chief Risk Officer Laura Warner are leaving. A series of scandals raised questions about Credit Suisse's risk management. In China, Bloomberg has learned that the central bank has asked the nation's major lenders to curtail loan growth for the rest of the year. A surge in lending the first 2 months raised concerns of a bubble risk. Banks were told to keep new loans in 2021 at roughly the same level as last year. And in sports, Baylor stopped Gonzaga's bid to become the first undefeated men's NCAA basketball champion in 45 years. The Bears beat the Zags 86-70 for the school's first national title. Jared Butler led the way with 22 points. Gonzaga finished the season with a record of 31-1. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
How a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramlett and Tom King. Jonathan Farrell, thank you. Jonathan Farrell, off today on radio and television. He will return sometime, I'm told, in the vicinity of the end of the week.
That delay. The delay is getting longer between John and Farrell.
Well, you know, the brain goes, and I'm sorry. Futures -6, Dow futures -25. We have to look at the real yield for Jonathan Farrell. We do that pretty much unch through the week, -0.66. And, of course, a major bet here for the financial system is that the real yield will elevate, move less negative back towards zero, and maybe back towards, heaven forbid, a positive statistic benefiting all within banking. But will it benefit a troubled Credit Suisse? Allison Williams joins us right now with Bloomberg Intelligence. And what is so wonderful about Allison Williams is not only the grizzled view of the U.S. banking system, but also those in Europe who have for years tried to participate in America and defend the franchises in Europe. Allison, thank you so much for joining. I'm just going to cut to the basic question I have that remains unanswered. Credit Suisse, to be put out of their misery, how do they end what has been years and years and years of sort of kind of like? Do you see them as a combination candidate?
Well, everyone's a combination candidate, and I think especially in Europe, although I think cross-border is perhaps what might benefit some of these banks the most, and obviously that's extremely difficult, especially because of regulations. But I think, you know, in any case, you know, the question with the Swiss banks, you know, regardless if they combined or standalone, is, you know, investors really love the wealth business for Credit Suisse, and especially UBS. It's sort of the crown jewel of banking, if you will. But it comes with that investment bank, and this is perhaps another case where investors are, you know, we had a great fundamental quarter, and still the investment bank is sort of taking away.
If you toss out the head of banking, if you toss out the head of risk, how do the other divisions respond?
Well, I think, you know, obviously you expect to have headcount changes in something like this, but I think it really is clear that there is, you know, something more fundamental that needs to happen at the bank in terms of having a culture of risk, and that is really something that, you know, Tom Gottstein, as he came in, has been making changes. The basic strategy the same, started making little changes, and obviously there needs to be a much bigger overhaul. Now, we've seen this at Deutsche Bank going on for a while. We've seen this at Wells Fargo, and we've seen this now at Citigroup. And so we know that these do not get fixed overnight. I will point out that what was interesting is, you know, Wells Fargo and Deutsche Bank, who are two companies that have been, you know, in a multi-year process of upgrading their risk and control system and their culture, came out with immaterial losses.
Well, when we talk about Credit Suisse here, we're not just talking about the Archegos incident. We're talking also about what happened with Greensill Capital and the collapse there. Story coming out right now on the Bloomberg talking about Credit Suisse may let clients take losses on those Greensill funds. I'm just wondering the liability that trickles out here, not only on a legal standpoint, because I'm sure there'll be plenty of litigation stemming from the Greensill issues as well as the Archegos debacle, but also from a reputational risk. I mean, how much more capital could get withdrawn from this bank that perhaps is not fully priced in or factored in at this point, Allison?
It's not just these big capital hits. So Greensill, we are worried about the big capital hit, but there's more than that, right? So we can say, oh, well, if it wasn't for this big hit, they had these great fundamental earnings, but how much of those fundamental revenues have been boosted by, you know, perhaps risk-taking? And I think that's at the core of the investment bank is the risk-reward proposition. And, you know, in times with very robust markets and everyone's making money, people are not as focused on risk. And then when things go wrong, there tends to be a lot more attention. And I think that's, you know, to your point, that really is the concern, is the reputational damage, and especially for prime brokerage, which is an area where, you know, it can be very sort of dependent on the markets, and there's a big focus on liquidity and the like. You know, someone like J.P. Morgan, Morgan Stanley, and Goldman Sachs, who are the leaders in that business, is this a time where they come in and try to take shares, similar to what happened with Deutsche Bank?
Okay, there's a lot here, Allison. On one hand, you've got the $4.7 billion hit to Credit Suisse due to the Archegos debacle. You've got the Greensill Fund issue and the fact that they're going to let clients take losses. You've got the reputational damage. But you mentioned something else. This raises a question about their risk-taking ability, which is a key part of their income, especially now at such a low rate period of time. Can you talk about how this raises potential risks for other banks too, or is this, dare I say it, idiosyncratic for Credit Suisse?
I would say nothing is idiosyncratic, or it's hard to imagine something that is. And, I'm sure that, desks across the street are looking at their risks, looking at the specifics of what's happened here. It's not just a postmortem for Credit Suisse, but for everybody else. Are there other situations out there like this? How can this be avoided? And I think the fact that there were some things that the regulators are asking about, shows that perhaps there are some risks in terms of monitoring these situations that might be better addressed more broadly.
Allison, one final question. Would the Swiss government allow Morgan Stanley to acquire Credit Suisse?
Well, I'm not sure that would be possible from a technical standpoint, just in terms of, perhaps possible, but in terms of the systemic risk and the size of that organization, would get regulatory attention from all areas. But I think that Morgan Stanley likes to be a buyer, and I think they have two very big executions that they're working on right now. Yeah. So their plate is a bit full. But they have really been focused really on the U.S. business, whereas Credit Suisse has been focused more on Asia and the international markets.
Well, maybe it's a bolt-on, or if we have a few more of these debacles. Allison Williams, thank you so much. With Bloomberg Intelligence here on Credit Suisse, and of course how it dovetails into American banking. Lisa, all I know is you just can, Doug Cass talking about cockroaches out there, and you just wonder where the next cockroach is.
Yeah, well, you talk about how this is not isolated, right? I mean, Scott Meinert of Guggenheim came out yesterday on Bloomberg Television and said it almost seems like likely or inevitable that we're going to see another Archegos situation just due to the amount of leverage in the system and due to the fact that people are taking excessive risk to get any return at all, and that's been the safest bet up till now.
Yeah, I think that's dead on. And Lisa, what I would emphasize is you get it right once, you get it right twice. By the third time you get a trade right, you begin to lever up. It's almost like the human condition, and maybe that's what we'll see as the cockroaches come out. Right now, the futures at -7, Dow futures -40. We continue to review the markets on investment strategy. From New Venus, Chicago, Brian Nick next. This is Bloomberg. Good morning.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving...
This place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
The biggest driver of equity markets and frankly the economy right now is the recovery from the pandemic.
There's a lot of optimism in the markets about where the economy is going.
To really get that acceleration upward, we need to see earnings show up.
When you look at the core PCE deflator, it looks like we've killed inflation.
This has all the classic manifestations of a very frothy environment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The concept of risk in an era of hope. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. John Ferro, Tom Keene, Lisa Abramowitz. John Ferro is off today. He will be back later this week. I will not rib him about taking time off because I think it is well-deserved. And frankly, everybody feels like they need a break after the past 12 months. I will say, Tom, this is a very interesting moment where hope needs to meet reality. And I think Liz Ann Saunders nailed it when she said, we just don't know whether we're setting the bar too high or too low.
We just don't know into April 14th. Let's say JP Morgan kicks off earnings season, and you go to April 28th, Fed Day, Apple with earnings there, and then we dive into May. And Lisa, I really wonder, where are we 30, 31 days from now? I mean, to me, it's a complete mystery as corporations reset and this stock market resets for the expectations of the autumn and into winter.
And public health officials reset. I mean, President Biden coming out reportedly on CNN earlier this morning saying that now he's setting a target date of April 19th for all adults to be eligible for getting vaccinated. We keep bringing the targets up, adding to this optimism, and yet there is a key question of how much momentum there is behind this. And it's not just about next quarter and the quarter after. Tom, you've been so good about this, but it's those projections out after that that we really have a lack of clarity on.
Back to back, Amish Adalja was with us with Johns Hopkins, and before that, Lisa Sherman with us with the Ad Council as they begin a messaging campaign. And the message last night, Lisa, was 38,000 at the Texas Rangers baseball game. They said, we're going to fill the seats. They did fill the seats. And you heard Dr. Adalja, he wasn't happy about that.
No, it's a race to try to get ahead of the pandemic with the vaccines, and we're not winning it quite yet. I mean, if you take a look at the actual case count, I know that that's how you spent your entire weekend.
Yes,
it's been pretty stubbornly high, and it's because of these variations.
I did look at the statistics for Brazil and India, and they're not good. It's an interesting soup here within the markets. Let's look at equity equities, bonds, currencies, commodities. I'm going to go backwards on this data check. 59.58 on West Texas Intermediate. American oil under $60 a barrel in the foreign exchange market. I've got a churn and not much going on. Sterling 138.28. Faro spending the sterling in Capri. We like to see that. Balance of payments and all that. And the yield 1.69%. Yield not giving me much today. In the equity markets, it's simple. A churn, but a little better tape in the last 20 minutes. Futures, -5. Nuveen is part of TIAA, but before that, Nuveen was the single best house of municipal bond analysis and management in this nation. The heritage is from Chicago. Brian Nick joins us with Nuveen TIAA, their chief investment strategist this morning. Brian, I want to go back to what you have learned about the core competency of Nuveen and municipal finance and this infrastructure bill, the stimulus bill beforehand. I mean, I know it's the Nuveen Rescue Plan, we can call it that, but what does it mean for those taking advantage of tax-free bonds?
Yeah, this is something we were waiting for, going back to the March stimulus plan that passed, and before that, the December one as well. We ended up not having a lot of state and local aid in it. And one of the things I think a lot of muni investors were waiting for was that push from the federal government to get money into states and localities and really support, if not the actual credit outlook, at least the perception of the credit status of municipal bonds. And so we saw that re-rating. You saw a lot of munis trading at pretty distressed levels compared to, say, similarly rated corporate bonds, treasuries, and some of that has been taken out. So munis have actually been one of the outperforming parts of the bond market this year.
Well, and that's why I call it the Nuveen Rescue Plan. I say that with great honor to the heritage of Nuveen. Bring it over to the Nuveen mandate in 2021, and that is once again an underestimation of politics to the rescue. Can you be optimistic forward because of politics to the rescue?
I think we can. We just put out our second quarter outlook. We called it Welcome to the Upside Scenario, because if we were gaming this out back in November, December, where we are today really fits firmly in what we would have called the upside scenario back then, meaning we're way ahead of schedule on vaccinations, at least here in the U.S. The economy has come roaring out of the gate. A couple of months ago, we thought this might be a negative quarter. First quarter might be a negative quarter for the U.S. economy. That's clearly not going to be the case. And so in many respects, we're in that upside scenario, meaning we've seen interest rates move up, maybe occasionally to uncomfortable levels, inflation basically re-rate, and maybe even go a tick higher. I think the key here is not just the earnings season, but the macro. Does the data continue to exceed expectations? We saw it exceed expectations yesterday on the ISM services. We saw last week the jobs, which is actually a lagging indicator, exceeding expectations. So the fact that economists are still having to catch up to just how good this economy has come roaring out of the gate in 2021 means I think we're going to see the same kind of upside surprises in the earnings season as well.
How good this recovery has been. Are you talking about the world or are you talking about the United States?
Well, from a pandemic perspective, I think the U.S. and the U.K. and a couple of other countries have really come out very strong, vaccinating large percentages of their population much more quickly, I think, than we could have possibly anticipated maybe just 2 months ago, let alone 5 or 6 months ago when we were kind of writing that 2021 outlook. But in general, the data has also been quite good. Even in the countries that haven't gotten the vaccinations quite up and running as quickly, you're seeing those PMI surveys in China overnight quite strong, in the Eurozone quite strong. As long as there's a couple of large economies, including the U.S., that seem like they're doing really well, a lot of the rest of the world's going to benefit. So it's really, this year has been a risk-on year so far, with the U.S. leading. We don't think that's necessarily going to remain the case. We think emerging markets, I think, eventually are going to have their day in the sun as well. And later in the year, I think as Europe domestic demand catches up, we could see a more kind of full-fledged rally in that equity market as well.
Well, Brian, this is exactly where I wanted to go, because right now it's being led by the United States and by the UK. And some of these other areas, perhaps the data looks better, but they're lagging behind. And this has led to that strong dollar that has upended some of the consensus heading into 2021. Can you fold a dollar call into your outlook for emerging markets? Because so far this year, it hasn't worked the way people expected, even though it has been a risk-on environment.
Yeah, that's right. And the dollar weakened a lot in the tail end of 2020. So we're kind of coming in at this very, not weak, but relatively weak level for the dollar. And it's rallied. And I think you can go back to 2018. You saw something very similar, right? We passed this big sort of counter-cyclical stimulus bill at the end of 2017, that large tax cut and reform package. And the U.S. came roaring out in 2018, basically in a kind of a go-it-alone fashion, and that brought the dollar up. That tightens global financial conditions, particularly unwelcome for emerging market currencies and emerging market assets. I don't think that's going to be the case this year. We're just seeing a different order of magnitude of just how good the growth pickup is going to be. And it's hard for that not to spill over, I think, to the benefit of EM. I think it's going to depend. There's a lot of idiosyncratic risk here. You look at vaccinations, caseloads. I think that will, factor into investors' willingness to engage in, say, higher yielding parts of the bond market and EM, higher yielding currencies. Just how in control of the pandemic are they in these individual countries? But our emerging market strategists and portfolio managers are still quite bullish. Even if the dollar doesn't supply all of that kind of by weakening, we're still going to get EM asset appreciation this year.
But the great mystery, Brian Hick, is the basic idea of extrapolating out past Q2 and even out to Q3 to the total mystery of Q4 and into 2022. You've got a Nuveen network of research across this nation. You've got every resource of TIAA-CREF. Can you have a better insight about what we're going to see Q4 or Q1 next year?
And I think a lot of it is about where rates are going to be. Just how aggressive does the bond market get in pricing in basically a Fed about face, where the Fed has to eventually come much earlier, raising interest rates.
Are you calling for that?
No, we're not. We don't think that the 10-year is going to continue to increase at the rate that it has been. We think 2% is a reasonable level, and I think a benign level for other markets. Credit markets have been completely unbothered by the backup in the 10-year. Equity markets, obviously, at or close to all-time highs. So we don't think it's been a disruptive force yet. If we see anything that changes the Fed's game, what the Fed feels like it needs to do, I think that becomes a more important thing. But I think the end of quantitative easing sometime in the first quarter of next year is probably priced in. I think that's part of that volatility we saw in the first quarter. So it's just a matter of, does the Fed change its communication around the dots and the eventual liftoff, and then the pace of rate hikes once it lifts off? My sense is they're not going to do that. This is a new Fed. They have a new paradigm. They're much more interested in seeing inflation above 2%, in seeing unemployment perhaps below 3% sometime in the next couple of years. And I think it's going to keep its foot on the gas until it gets to that point, which means the runway ahead for most of the assets that we manage at Nuveen is still pretty long.
Brian, a lot of investors who've come on this show and others on Bloomberg Television have said that they like the U.S. over the rest of the world. Are you changing that? Do you disagree with that? And do you prioritize Europe and the emerging markets over the U.S. based on hope versus reality? There's more hope there and more potential for upside surprise.
Yeah, the valuation gap continues, I think, to attract us somewhat to those non-U.S. Parts of the market. I think mainly emerging markets at this point. We're willing to wait and see on Europe and I think broader EFA. It's hard to ignore the U.S. being just the dominant growth driver and having those high percentages in growth sectors. So if you're looking for anything around, sort of the tech dip that we saw in the first quarter, if you're looking to buy on that dip as we were at the end of March, you're going to be, basically looking at U.S. stocks, because that's where the bounce is going to come in. So that's what we've seen so far. But I think with the dollar being as strong as it is, especially against emerging markets, and with that valuation gap, I think still pretty wide, and with earnings momentum starting to look really good in emerging markets, the revisions have been strongly positive. I think that's an area where I think certainly by the end of this quarter, over the balance of the year, that's an area that we could really see kind of come back and eventually, I think, eclipse the U.S. by the end of the year.
Brian, Nick, thank you so much. Very interesting. With Nuveen, their chief investment strategist. Lisa, what surprises me Monday to Tuesday is we're getting a recapitulation of EM enthusiasm.
Yeah, and it's really overnight. I think that this is the key question, right, is about the dollar. Can we get a weaker dollar from here? And we've seen a number of Wall Street houses come out and say, including Goldman Sachs, maybe not. You've got a tightening Fed. You've got fiscal policy driving growth. Hard to see a weaker dollar from here.
This is something I do agree. You need a weaker dollar to make that calculus work. Coming up, it stretches from St. Louis, northeast of St. Louis, up south of Springfield, and up, well, in the vicinity of Chicago and the distant horizon, the 13th Congressional District of Illinois. Rodney Davis will join us. This is Bloomberg. Good morning.
With the First Word News, I'm Ritika Gupta. President Biden reportedly now wants to move up his deadline for all American adults to be eligible for the coronavirus vaccine to April 19th. That's according to CNN. Previously, the president had said May 1st was his target date. He'll discuss vaccines later today in Washington. Iran and world powers have begun their most serious attempt yet to revive that troubled nuclear deal. And for the first time since Donald Trump sent the agreement into free fall, American and Iranian negotiators are in the same room. They're not expected to speak to each other directly in Vienna, though. Iran is insisting the U.S. lift sanctions. The White House has ruled out any unilateral gestures. A tough day at Credit Suisse. The bank will take a $4.7 billion write-down tied to the implosion of Archegos Capital Management. Plus, 2 top executives will be replaced after a series of scandals raised questions about risk management. Investment bank head Brian Chin and Chief Risk Officer Lara Warner are leaving Credit Suisse. In Israel, Prime Minister Benjamin Netanyahu has been chosen to try to form the next government. By law, the Prime Minister has 28 days to build a coalition with the possibility of a 2-week extension. Last month's election was Israel's 4th in 2 years. The outcome was inconclusive. There was no clear path for either Netanyahu or his rivals to put together a government. And U.S. airlines are bringing back more pilots as they prepare for an expected travel rebound. Delta has now recalled all 1,700 pilots who were at home. Staffing shortages had led Delta to cancel about 100 flights on Sunday. Meanwhile, Southwest says more than 200 pilots will return from voluntary leave on June the 1st. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ruchika Gupta. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's a very tough environment because you don't want to raise rates in the midst of what is still a downturn. And at the same time, you can't sit back and say, okay, we're not going to worry about inflation, because that also in itself is quite an aggressive setback.
Carmen Reinhart, the World Bank chief economist, with my essay of the summer last summer on the real challenges coming out of global GDP. We'll get a reaffirmation of that in 12 minutes from the International Monetary Fund. Really looking forward to that. Right now, on our domestic politics in America, we look northeast of St. Louis to Cardinals territory, moving up southeast of Springfield, and then on up somewhere in the vicinity of Chicago. It is a narrow district, the 13th Congressional District of Illinois, and the Republican Rodney Davis joins us this morning. Congressman, thank you so much for joining us. Do you need a 6-lane highway from Taylorville into Springfield? What are you going to get out of the infrastructure bill?
You know what? We already have 4 lanes between Taylorville and Springfield. It's great for our community here and great for Central Illinois. I just hope we get some bipartisanship out of the infrastructure bill. That's what I'm hoping for.
When we get bipartisanship, we need to go to centrist Democrats who need to get reelected and centrist Republicans. 2 cycles ago, you barely won reelection. This time around, granted, you did better than ever. Are you a centrist Republican? And what is the common ground you have with Senator Manchin of West Virginia?
Well, I am listed as the 13th most bipartisan member of the House, according to the Lugar Center. Senator Manchin, he's shown that he can be a force in the Senate. The problem we have right now with this infrastructure package, and bipartisanship was the message that Ranking Member Sam Graves and I and a small group of Republicans sent directly to the president, to the vice president, to Secretary Buttigieg in the Oval Office a few weeks ago, that we need bipartisanship. I just don't think Speaker Pelosi and Leader Schumer are going to allow the administration to go that route, though.
Congressman, given your experience on the Committee for Transportation, Infrastructure, Roads and Bridges, this is your purview. What does a bipartisan bill, a true bipartisan bill that could pass, look like? How big is it, and what does it focus on?
Well, I don't like to get into debates about how much something could cost. Let's actually dedicate a bill towards rebuilding our roads and our bridges, our waterways, our airports, our locks and dams. If we can do that, you will have Republicans crawling all over each other to support a bill like that. The problem we're going to have, though, is I believe this infrastructure proposal is going to be nothing more than the Green New Deal disguised under a convenient infrastructure title that will dedicate a small amount towards roads, bridges, waterways, etc. It's very frustrating. You see in the proposal, the administration wants to spend $50 billion to stand up another agency within the Department of Commerce, and $42 billion for all of the locks and dams, all of the waterways, all of the ports, and even airports in this country. That's not a proposal.
Congressman, putting aside this particular proposal, let's say there was a bipartisan agreement on the infrastructure plans that you thought were necessary, and let's say it was a pretty expensive plan. Would you support raising corporate taxes in order to pay for it?
Not at all. I think opening up the income tax code to pay for infrastructure is the wrong way to go. There's a lot of talk from Secretary Buttigieg and others who I've already enjoyed a good working relationship with the Secretary, talking about jobs being created with this package. I want to know how many jobs are going to be cost in the small businesses that are going to have to pay more in taxes coming out of a pandemic. That's the last thing we should be doing.
Congressman Davis, I'm sure that you wanted the All-Star game to be held under the stadium there in the shadow of Stan Musial and St. Louis Cardinals. It went to the Rockies. I understand that. But it's the why, the move of the All-Star game on this debate in Georgia over the Voting Rights Act and what Georgia will do about its elections. Comment, please, on what the Republican response should be to find fairer elections.
Well, first of all, I just wish some in corporate America would have read the bill in Georgia and would have seen the expansion of access to voting for all Georgians. We had problems in Fulton County, run by Democrats, where they had lines out the door. This bill would open more precincts. And those are the types of issues that I certainly hope corporate America stays off of Twitter and starts actually looking at legislation. My biggest fear is that Democrats are going to try and act like H.R. 1 that passed only with a partisan roll call. And the only thing bipartisan about it was the Democrat opposition joining all Republicans. I think they're going to try to turn that into the national version of Georgia's reforms, and that bill would be a disaster.
Congressman, the Georgia distinction is removing the decision process of elections from the Secretary of State of Georgia and the executive branch over to legislative control. Legislative control is an ancient art form in your state of Illinois. Is that the trap we have, in that our voting processes become a legislative process and not that of the executive branch?
Well, we need to make sure that our states and our localities have control over their elections, as the Constitution puts forth. The Democrats have tried now for 2 Congresses, and I've led the fight in introducing H.R. 1, which would nuclearize and expand procedures like ballot harvesting that have already been corrupted with fraud. We didn't seat an elected Republican in North Carolina's 9th district in 2019 because one of his operatives used a fraudulent process by trying to create a ballot harvesting process in that district. And the unfortunate thing is, he'll likely go to jail because of that. But if he was in California, what he did would have been perfectly legal. And that's wrong. Those are the types of policies that Democrats in Washington are trying to push forth. Also, they're trying to add $7.2 million in public money to their own campaigns. And I don't want H.R. 1 to become the next rallying cry, because it is not a voting rights bill at all.
Congressman, part of what I'm hearing from you is sort of this decrying of an attempt at bipartisanship that absolutely fizzles and is now very much a Democratic effort in the House and on the presidency. But a lot of people say that they just learned from prior administrations, including the Obama administration, that tried to do something on a bipartisanship level and didn't get anything done. Just quickly, what's your response to that?
Yeah, on infrastructure, because they failed miserably in what they proposed. You can't come up with a piece of legislation that you know is only going to appease one side and say take it or leave it. Look at the last time we had a non-reauthorization infrastructure package. That was under the Obama administration with the Obama era stimulus bill called ARA. That bill had about 6% of the funding dedicated towards infrastructure. Even the current Democrat chair of the Transportation and Infrastructure Committee, Peter DeFazio, voted against that bill because it wasn't enough infrastructure. I see Democrats going down that exact same path. The proposal they laid forth is woefully underfunded when it comes to rebuilding our roads and bridges. And if that's what's going to happen, they're going to negotiate with the far left of their party, and it's only going to get worse for jobs and our economy.
Rodney Davis, that is the largest backyard I've seen in, I think, 30 years. I hope the kid that's mowing that lawn is not using a push mower. They're out on the John Deere golf cart or whatever, pushing it around. Rodney Davis, thank you so much. The congressman from the 13th District in Illinois. Futures at -4, red and green, green on the screen, NASDAQ higher. This is Bloomberg. Good morning.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But it's very close to that. This is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. I'm not talking energy only, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero-carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom with a backup set of PowerPoints and a video clip. You just need to be here. You need to breathe it, and specifically the startup mode and things happening. Buses all around you here.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
In a boom economy and the challenges of this world, a market check. Futures at -5, Dow futures -45. Better than it was 2 hours ago. Actually, NASDAQ green on the screen as well, and the yield 1.69%. Francine Lacqua and I are supposed to be in Washington right now, meeting and greeting the world elite. Instead, I can do better and greet Michael McKee, our economics and policy correspondent, with the headline dump from the IMF. That's what we get, Mike.
That is correct, Tom. It is time for the World Economic Outlook, and the IMF has grown significantly more positive about the rebound from the coronavirus pandemic downturn. The world economy, it says, will grow 6% in 2021 after posting a 3.3% decline last year. That 6% is half a percentage point higher than they forecast just in January. In 2022, the world grows at a 4.4% rate. You can see there that China, the only country that posted a positive growth rate in 2020, is going to grow the fastest, followed by the United States, 6.4%. That's 1.3% faster growth for 2021 than they had forecast back in January. The European countries, though, trailing. You can see the Eurozone numbers are much weaker, and when you get down into the weeds, you can see that some of those countries are really suffering. If Spain had the biggest downturn in 2020, they're going to have a big upturn in 2021, but it still leaves them well below where they were. And you can see that Germany is struggling to grow at 3.6% this year and 3.4% next year. While those are a little bit higher, they're not significant. Of course, with all these numbers and this positivity comes a warning from the IMF. Things are better, a stronger forecast, but they say in the World Economic Outlook that it presents daunting challenges related to the divergences in the speed of recovery, both across and within countries, and the potential for persistent economic damage from the crisis. In other words, we're not all vaccinating at the same rate. The rich countries have the vaccine, the poor countries don't, and that's going to make a difference. And then countries that depend on travel and tourism, things like that, are going to suffer. Tom, they make the point that advanced economies from 2020 to 2022 are going to see per capita income losses of 11%, while developing and emerging market countries see 20% losses in per capita income.
Michael, I would suggest that down in Washington, the distance from the World Bank to the IMF has never been tighter. That street that divides the two buildings, they're essentially coalesced together, worried about the third world, worried about frontier and emerging market economies, Brazil and India, front and center in the pandemic. Can they actually input aid to those countries? Can they actually do something about it, or is it rhetoric?
Well, there's a major proposal on the table being discussed this week, probably voted on in June, to increase the allocation of SDRs, which is the reserve currency of the IMF. They give more to more countries, and then those countries can turn that in, buy cash with it. There are people on Capitol Hill in the United States, particularly Republicans, who say that countries could use that money to pay back China for its Belt and Road program, and that some emerging market economies will not spend it on the pandemic relief that it should be spent on, but it will line people's pockets. And then the third objection is that countries like Iran and Venezuela and Russia, who are in theory enemies of the United States, would get additional cash, in part funded by the United States.
Michael McKee, thank you so much. We'll have much more on this. The 3 reports of the International Monetary Fund at their spring meetings. Catherine Mann joins us now. Just what a day to have Stephen Roach with us earlier, and Catherine Mann here for a 3-hour conversation. She is Citigroup Global Chief Economist. Cathy Mann, I really want to talk about the locomotive here that is the U.S. Gita Gopinath talks about the divergences that are real. Are there any trains behind the locomotive, and what's the caboose?
Well, you know, the U.S. is the locomotive. It's the one country that's growing faster than everyone else relative to its historical experience. So it's the one that is going to be running a larger trade deficit over the next year or so. And virtually everyone else is either running a smaller deficit or running a bigger surplus. So the U.S. is back on track to be the locomotive. The problem is it's not quite as large as it used to be relative to the global economy. It's not quite as powerful a locomotive as it used to be. So it's going to be a challenge to get up the hill.
And there's also a question of how much this really brings the rest of the world along with it. And that's one of the big disagreements, frankly, on Wall Street that I'm hearing, how much to just continue to bet on the U.S. versus the rest of the world, or to bet on other areas that will get carried along. What's your view on that, based on a concept of a strengthening dollar, given the amount of dollar-denominated debt out there?
Well, so emerging markets are the ones who tend to be most at risk when we're talking about dollar-denominated debt. But I think it's important to think about the 2 factors that are relevant when thinking about an appreciation of the dollar. The first role is that it does, and the stronger U.S. economy that's associated with the stronger dollar, that is the trade channel, which is an important channel, bringing in imports, helping economies to grow through that channel, relative to the concerns about dollar-denominated debt and the exposure that countries have when you have an appreciation of the dollar. So those 2 are in opposition to one another. What we have found in doing some work looking at the taper tantrum period relative to where we are now is that many more economies are in the position of gaining when the dollar appreciates, because not only do they have dollar-denominated debt, but they also have dollar-denominated reserves. And so you have to consider that as well when thinking about exposure on the financial side.
So this is an argument, perhaps, that the rest of the world can come along more than some people think. Is that your view here, that we're going to see an acceleration that picks up speed in the emerging markets, in perhaps Europe, perhaps in 2022 as the U.S. slows down?
Well, so I think we have to consider the U.S. is not the only thing is going to be positive for emerging markets. There are a lot of negative or downside risks. And of course, that has to do with the vaccination path. And how soon those economies can get vaccinated and how soon they can get back on track with their own internal domestic demand. I mean, that's an important ingredient in the growth process for any economy is domestic demand. They can't entirely depend on export-led growth. Again, we have to remember the U.S. as a locomotive is not as strong a locomotive as it used to be, say, 20 years or 40 years ago.
As it used to be, and part of this, Catherine Mann, is whether we are a more open or less open economy. Where does the U.S. stand right now as an open economy, that dynamic to other nations?
Well, you know, the globalization as a general rule has been on the back foot for more than a decade in terms of their slowing of integration into the global economy. There's basically been a generalized slowdown in terms of that integration, and the U.S. is no exception from that. And of course, on the back of the last administration's approach to trade policy, which was to be very protectionist, that of course made the U.S. less open. The general tenor of the debate is not towards openness. So we have to be concerned about both the politics of an enlarging trade deficit that we will see in the data. We have to worry about the politics of it leading to potentially even more of a retrenchment in terms of globalization.
Do we have to worry about debt sustainability?
So debt sustainability, it's very much a question of which economies are going to be able to grow fast enough to put themselves on a sustainable path. So there's an intimate relationship between domestic demand-led growth, export orientation for most of the world, and debt sustainability. But in the longer term, of course, what really matters for debt sustainability is long-term capacity, sort of what we call potential output. And that depends intimately on business investment. We've got to have business investment being catalyzed by the infrastructure programs that the U.S. is talking about, that Europe is talking about, that a number of countries are talking about in the context of their net zero commitments. Something that is climate oriented is going to require private sector investment, and that's a critical ingredient, along with, of course, labor markets and productivity growth.
Catherine Mann, a few years ago at the Massachusetts Institute of Technology, you had the privilege of working with Rudy Dornbush. He handed you the Bible as you graduated from MIT. Tell us about the Bible that the great Rudy Dornbush handed you.
Right. So Rudy was one of my thesis advisors, Paul Krugman being the other. And what Rudy gave me, signed copy of the first edition of Robert Mundell's International Economics. And that really represents both Rudy's, his first edition, by the way, Open Economy Macroeconomics, which integrated goods and markets and asset markets in one place. You know, that his Bible, and then, of course, his mentor's Bible, meaning Robert Mundell's International Economics, those are really my Bibles today.
The continuity of this, Dr. Mann, is absolutely extraordinary. I can think of nowhere else where there's such a cadence as there is in international economics. What do we think today that Robert Mundell invented 50 years ago?
Well, you know, the most famous thing that we have been working with in the open economy that has his name on it is the Mundell-Fleming model, which put three different markets together. The sort of the IS curve, meaning the investment savings part of the economy, the monetary policy, the so-called LM curve, and then the open economy, meaning balance of payments and how that changed with regard to exchange rates and external demand. So those are the three markets that continue to be the important ones. How we measure them is different. How we think that they work together is different. But those still are the drivers of economic performance.
And today taken for granted, and at the time foundationally and revolutionary for Robert Mundell. Dr. Mann, thank you so much. With Citigroup, their global chief economist, the laureate of Columbia at 88 years old. Lisa, just extraordinary to see the timeline of this and, you know, to all that we've talked about over the years and in economics, and those rules then still are part of what we do today.
The fundamentals still driving, even though we have a vastly changed scenario. And right now, we are trying to understand how we are misstating the future as we look to hope versus reality, frankly, given the hope trade. And we're going to carry that conversation forward on another one of the Pharaoh's properties.
And what's so interesting here, Lisa, is the idea of the bond market is litmus paper for this system. It wasn't like that 50 years ago.
Yeah, there is a question of how much it's a litmus paper at a time of such central bank intervention. We'll drive that conversation forward on the open. Brian Belsky, BMO Capital Markets Chief Investment Strategist, will be among those joining me on a Pharaoh property that I'll be absence, or as some people might say, Tom, sabbatical.
Sabbatical. We'll see. It depends if the Gulf Stream can get them home. Stay with us. Futures, oh, red and green on the screen. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. Credit Suisse is paying the price for its involvement in the collapse of Archegos Capital Management. The bank will take a $4.7 billion write-down, cut its dividend proposal, and replace two top executives. Investment bank head Brian Chin and Chief Risk Officer Laura Warner are leaving. A series of scandals raise questions about Credit Suisse's risk management. In China, Bloomberg's learned that the central bank has asked the nation's major lenders to curtail loan growth the rest of the year. A surge in lending the first 2 months raised concern of a bubble risk. Banks were told to keep new loans in 2021 at roughly the same level as last year. And New Zealand has agreed to open a quarantine-free travel corridor with Australia. It's a major boost for the country's ailing tourism industry. New Zealand's Prime Minister Jacinda Ardern says the so-called travel bubble will open April 19th. The pandemic forced the two neighbours to close their international borders more than a year ago. And the French government has come to the rescue of Air France KLM. It will give the carrier up to $4.7 billion as part of a recapitalization plan. In return, France will raise its stake in the airline to up to 30%. The aid will go to Air France KLM, but will benefit only the French unit. The Netherlands is continuing talks on a plan of its own to refinance KLM. BP is poised to restart share buybacks about a year earlier than expected. The London-based energy company says it's already achieved its $35 billion net debt target. That was the threshold it's set for resuming buybacks. The news reflects an accelerated pace of asset sales and improved business performance for BP. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's very difficult to have a mass gathering like this with only maybe less than 20% of your population vaccinated, which is the case in Texas. You wonder, just because of how the prevalence of the disease in the community, if this is going to lead to transmission events and even super spreader events, and put contact tracers underwater because they've got so many cases to track.
Dr. Adalja, Johns Hopkins University, we've had an exceptionally strong day of conversations on the pandemic. Dr. Adalja, they're talking about 38,238 people, I believe it was, at the baseball game, the Texas Rangers last night. Of course, he was quite not upset about it, but just showing the concern of the speed of vaccination versus our urgency to get out and get about. We continue that discussion now with Lloyd Minor. To say he's Naumann Dean of the Stanford University School of Medicine barely describes a path he's taken from Johns Hopkins to Stanford with original research and solution for inner ear disorders, I should say. Dr. Minor, good morning. I wish we had 3 hours. We do not. I want to go right away to what California's doing, saying we got to figure out how to get the kids vaccinated. From where you sit, do we know yet? Is it safe for children to be vaccinated?
Well, good morning. Those trials are underway. The trials for adolescents are well into the accrual phase, and we're getting data back on that in real time. There will also be trials going down to younger ages. I certainly agree that in order to have the type of broad immunity that we need to really tamp down COVID-19, we're going to need to have vaccination for children. And I'm optimistic that, as we've heard from the CDC and the FDA, that perhaps later this year, we will be able to do that.
I need to go to the worry of variants. I believe I can state, doctor, as an amateur, that all pandemics, all viruses have variants. But at your clinical virology lab, you are really focused on India. The math out of India is not good, is it?
We were the first, I believe, in the United States to identify one of the variants of concern from India, a variant that has 2 critical mutations in the so-called spike protein. We and others across the country are watching the variant situation very closely. As we've all learned, the vaccines that are available today still have efficacy against the variants, some of them not as effective as towards the original strain, but they still have some degree of efficacy against the variant. So it still is really important that people, when they're eligible, get vaccinated, because that will do more than anything else to make sure that the variants don't get ahead and quell the encouraging progress that we've had so far in controlling the pandemic.
Well, if you look at tetanus, and if you look at the span from bacteriology over to virology, do you just assume that down the road we're all going to get shots to redo our vaccine now? Is it just a given by a pro like you that X number of years out, I'm going to be back getting Pfizer, Moderna, J&J, whatever?
I think that one of the things we've learned from this pandemic is we're experiencing a renaissance in vaccinology. And I think it's very likely that, yes, for COVID-related diseases, perhaps for other diseases as well, we'll have new vaccines that, like these vaccines, are very effective against deadly viral diseases. And it really is ushering in a new era of preventative medicine that's really exciting.
Dr. Minor, again on the pandemic, and I want to go to the California experience here. So much of it's waiting in lines. We see Walmart coming out with degrees. We spoke with the Ad Council earlier about giving people the confidence to be vaccinated. What do you need to see in California to boost that confidence, to get people to get the courage to get vaccinated?
confidence is certainly one issue. Also, a fundamental issue is availability of the vaccine, and for people to be able to have accessible ways to get the vaccine. You know, it's fine to have an online system to sign up for appointments, and that's been very, very valuable, very critically important. But there are some that don't have internet access. There are others that simply don't have the means to get to a vaccination site. We've got to reach out to those people and make sure that if they wish to be vaccinated, they have the opportunity to be vaccinated.
Well, the opportunity to be vaccinated really comes down to the distribution as well. Where do you think we will be on May 6th, or for that matter, June 6th? What's the timeline that you see?
I'm encouraged by the timeline. On Saturday, this past Saturday, more than 4 million Americans received a dose of vaccine. That number has continued to rise, and with the increased availability of the 3 vaccines that have been given FDA emergency use authorization in the U.S., with their increased availability, we're going to be able to vaccinate more and more people. I think the timeline is very encouraging to continue to increase the number of daily doses of vaccine administered in the United States.
Dr. Miner, tell us about our hospitals now. Do you feel like they're properly funded with the stimulus and all? Have we gone beyond the hospital crisis?
There are still concerns for the hospitals, certainly. The entire operations of hospitals were disrupted in fundamental ways at all stages of the pandemic. We're now catching up with the care that was deferred because of periods in which access to care was either shut down or greatly diminished out of concerns for the safety of healthcare workers and patients. We need to continue to focus on catching up on providing that care, the prevention that we know is important. So yes, hospitals need to continue to receive attention and support.
Lloyd Miner, thank you so much, and particularly thank you to Stanford for the research on the Indian variant as well. Lloyd Miner is the Dean of the School of Medicine at Stanford University. Again, if you're just joining us worldwide, the International Monetary Fund out with some extraordinary lifts to their outlook. They usually follow upon the national data. Geeta Gopinath making clear there is a divergence out there, not news, but nevertheless to see it codified by the IMF is important. Our Michael McKee noting substantial growth lifts in the United States, and indeed China out to an 8% statistic as well, and others lagging behind. Michael McKee mentioning Germany is a particular laggard, and of course all of that folded in to the pandemic and the virus as we have noted. Through this week, and it's a week, well, it's churning after a jobs week. We had 2 big up days in the market. Right now, -10 on futures. It's a better futures than what we saw 3 hours ago, no question about that. We had positive NASDAQ futures ever so slightly, right now negative there as well. I do want to note dollar dynamics have been so fractionally weaker dollar over the last 3 days, and you see that in yen from a 110 level, stronger yen over the last 3 days, right now 109.93 as well. I should note Turkish lira, we've been really off the EM map for the last few days. Some real challenges to Mr. Erdogan, and you see that with weaker lira. Damian Sassower of Bloomberg yesterday, exceptionally cautious on Turkey and the path for the lira forward. Please stay with us through the day. Jason Furman will join David Weston on Balance of Power, an update there on our fiscal challenges, an update there on the fiscal realities of infrastructure. Please stay with us on Bloomberg Radio, on Bloomberg Television. Good morning.
such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
From New York City for our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the open starts right now. We begin with the big issue, the return of U.S. exceptionalism.
The U.S. is firing on all cylinders.
This is a period of U.S. exceptionalism.
We are seeing a pretty big acceleration.
The extraordinary pace of 6% plus economic activity in North America.
Truly remarkable considering where we've come from.
There are lots of reasons to like the U.S.
Some really blockbuster data.
The vaccine rollout, an enormous amount of stimulus.
We're now seeing a $2 trillion plus infrastructure bill in the works.
The U.S. is definitely in the lead.
The rest of the world playing catch up.
The U.S. will continue to come in strong.
The U.S. is going to tug everyone along for the ride.
There's almost no way to go wrong buying U.S. assets right now.
But what does that mean for the rest of the world? For more, let's bring in the Bloomberg team, Michael McKee and Kaylee Lyons. Mike, let's start with you.
Well, the IMF is out with its latest economic forecast for the world, and all I can say is the guy at the bar who's buying around for the house is really popular. The World Economic Forecast is for growth of 6% this year. That is 0.5% better than the IMF forecast in January. And you look at the leaders, China, which grew this year, or grew in 2020 rather, is going to be the biggest contributor, but the United States close behind, 6.4% growth for the year. That is up 1.3% from their January forecast. With all the stimulus that the United States is pouring into the markets, that should help not just here, but around the world as U.S. exports and imports continue to rise. The numbers are not as good in Europe, the Eurozone lagging behind, with Germany really bringing up the rear here at 3.6% growth, nowhere near what the United States is doing, even though it's an export powerhouse. The IMF does go on to warn, however, that this could be a difficult year at the same time for a number of countries, even if the United States and China are buying more. They say the outlook presents daunting challenges related to divergences in the speed of recovery both across and within countries, and the potential for persistent economic damage from the crisis. What they're talking about is the pace of vaccine rollouts. Very strong here in the United States, weak in Europe, and many emerging and frontier markets haven't even gotten their allocations yet. So that's going to make a big difference. Also, the size of the fiscal stimulus that people are putting into their economies is also going to make a big difference, in the United States leading the way there. The risks out there, pandemic emergence could come back, and then tighter financial conditions. We could see a problem in markets because the U.S. is putting so much into that, which could lead to social unrest in some other countries, especially if emerging markets have difficulty paying back dollar-denominated loans. And you can see the divergent recovery scenarios here. The advanced economies are going to see their incomes for 2020 to 2022 drop by 11%, but in the developing countries, 20%. 95 million more people have fallen into poverty, Lisa, than in 2020, and 80 million are more undernourished than before. So a two-speed recovery, but it definitely seems to be V-shaped at this point.
And translating these prognostications and predictions into market action has been a very difficult task. Kaylee Lyons here with a sense of where we are right now. Kaylee, what are we seeing today?
Well, Lisa, it's interesting. We have obviously seen many beats on the economic data here in the U.S. We saw that with ISM services yesterday, the jobs report on Friday, and we, of course, get that better growth outlook, and that is driving demand for U.S. equities. We saw that evident in the record highs yesterday, that better growth outlook now meaning that U.S. stocks are outperforming the rest of the world once again. The S&P 500 is up about 53% over the last year relative to the MSCI All-Country Index, which ex-U.S., which is up only 46%. That margin of outperformance for the U.S. on a year-to-date basis is about 4 percentage points. And this is happening, Lisa, even though we have seen this rotation towards value globally. You would think that would lend support to cheaper equities on a regional basis, but that isn't the case. It seems to be that the better growth outlook here in the U.S. means investors are willing to pay a higher premium for it. The stock 600 in Europe, for example, only trades at a forward PE multiple of about 18 versus 23 times for the S&P. It's more expensive on a price-to-book basis as well, but still looking attractive to investors. And of course, when we're talking about assets that are attractive, we have to talk about bonds as well, because U.S. Treasuries are still the high yielder globally looking at developed sovereign bond markets. The U.S. 10-year yield sitting right around 1.7% after a 95 basis point move in just the last 6 months. And we have to compare that with just 81 basis points on the gilts, 11 basis points on 10-year JGBs, and then, of course, negative 30 basis points for German bunds. So you get decisively a better payout when holding U.S. debt, Lisa. That drives demand. And, of course, in turn, that also drives demand for the U.S. dollar, Lisa.
Kaylee Lyons, thank you so much. And also our thanks to Michael McKee. Meanwhile, BMO's Brian Belsky expecting the rally in U.S. equities to continue, writing, quote, year one of the current bull has exhibited the strongest gains of all past bull markets since 1945. Expect smaller but still solid gains in year two of the bull. Brian joins us now. Brian, you have been right on your bullish call consistently when it comes to U.S. equities. Going forward, will the U.S. still lead the pack in terms of equity valuations and the increases that we see, or are they going to lag behind as people price in the hope of emerging markets of Europe?
Lisa, thank you so much for having us. We really appreciate the time. You know, year two of the bull has started as part of our 20-year bull market that we've been, as you say, very consistent on. We think that in March of 2020 was the reset of the secular bull market. And given the fact that stocks lead earnings, which lead the economy, that formula is following suit with respect to what happens in investing in general, but especially in the United States. I go back to the last 5 to 10 years, Lisa, and you think about what other people are saying, other shops and other opinions with respect to macro, and it's been emerging markets, emerging markets, emerging markets, Europe, 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 year after year after year, and it's been the wrong call. And the reason why it's been the wrong call, I think, is that we've kind of forgotten that in the U.S., we have the best companies in the world, and we have been able to adapt and improvise a lot faster than other countries, number one. Number two, as we wrote in our hallmark piece last March 23rd of 2020, at the bottom, we said from every bear market and every recession, we transitioned from despair to hope. And we've seen new technologies, new strategies, and we really do believe that the strategies in the next 10 years, Lisa, are going to be much different than the previous 10 years, namely less macro, less quantitative, and more bottoms-up fundamentals. And that favors the United States of America in terms of our stock market because of how diversified we are in terms of our companies and how we're not concentrated like other areas. A lot of people talk about tech being concentrated, but remember, tech has little phalanges that go into every single industry and every sector, and that's why the United States has been outperforming.
That's a phenomenal image, the phalanges of the tech industry. Brian, you're allowed to do a victory lap here. You did get it right, and I don't want to say this time is different, but people are saying perhaps this time is different based on the fact that we may be entering a new regime of rates rising, of some of this optimism filtering into higher borrowing costs and tighter Fed policy. At what point does that crimp some of the expectations for equity earnings and for equity profits based on the fact that historically that has been a huge issue with respect to how people value this asset class?
Well, a couple of things, Lisa. It's always dangerous to say it's different this time. That's really the kiss of death, number one. Number two, this is my 31st year on Wall Street. We've been waiting for inflation for 39 years. We're going to continue to wait for that inflation. We have an earnings catch-up happening right now within at what point what used to be the largest sector in our markets, financials. And we're going to see that continue. We're going to see industrials continue to increase with respect to the earnings catch-up, and more evenly distributed earnings growth within consumer discretionary. Remember, 70% of our economy is driven by the consumer. And what's the consumer buying? We're buying a lot of content. We're buying a lot of technology. But really, again, there's no way that we would ever have a vaccine present in the United States without technology. And so we continue to believe that the diversification with respect to not only performance, but earnings performance. And then lastly, I would tell you this. Those focusing on valuation only in terms of future predictor of performance of the stock market is absolutely wrong. From a longer-term perspective, meaning several years, absolutely PEs are important. But PEs in particular are a terrible predictor of performance. And you really have to look at things from a bottoms-up perspective. So this is less about markets, Lisa, less about ETFs, less about buying sectors.